prospectus, and here we expect you to read through and understand what is involved in this prospectus and what you're signing up to. So if you're okay with what the prospectus is guiding you on, or your broker has taken you through, you will select that you have read and understood the terms, and save and submit your application by selecting save and confirm. So when that is done, you will see the status here changes, and it has the details of your application. Key to note is this reference number. It's the one supposed to share with your broker and send them your proof of payment. Then you also have this button that indicates view, and this allows you to print out the details of your application, which you can still email and send to your broker. So that completes your application. So the next and final step is to bank the funds for your application on the details your broker will have shared with you, and then they will be in position to submit your application. Thank you.
What is a share? A share is a piece of a business. Companies sell shares on the stock market to increase funds, to expand and grow.
Buying and selling your shares is simpler with USSD. To buy shares using USSD, dial *165*6#. Choose Buy Shares. Select your broker from the list provided. Enter the number of shares you wish to buy. Enter the price you wish to buy each share at. You'll be required to enter your mobile money PIN to authorize the transaction. If you want to sell shares, select option 3. Then select your broker from the list provided. Enter the number of shares you wish to sell. Enter the selling price for each share. Enter your mobile money PIN to authorize the sale. If you want to check order status, dial *165*6#. Select option 5. Select a broker. Enter your mobile money PIN to authorize. You will then be able to view your transactions. Together, we're unstoppable.
Open an investment account on the Uganda Securities Exchange with your smartphone or computer. Step 1. Visit the USE Easy portal at scd.use.or.ug and click Create an account. Step 2. Enter your email address and password to sign up. Step 3. Check your email for the activation token and click on the link to activate your account. Step 4. Log in using your email address and password you used to sign up. Step 5. Click Link or Create SCD account. Step 6. Click Open an account. Step 7. Fill in your personal details required. Step 8. Upload your photo. Step 9. Upload a photo of the front and back of your national ID. Step 10. Select your broker from the drop-down options provided. For any inquiries, please do not hesitate to contact us.
To make a self-application on the Easy portal, so go to the web page scd.use.or.ug, input your email address and then your password and sign in. So when you sign in, select current IPOs and click on MTN IPO, and then go to the button Apply for this IPO. So it will bring your account details. When you confirm they are the right ones, then select Next, and then it will bring you to input and confirm your application details. So select No for tax exemption. So most of us are not tax exempt. If you're tax exempt and you select Yes, you will have to provide details for your broker to confirm that. Then select the broker you want to apply through and input the number of shares that you're purchasing. Please note they have to be in multiples of 500. So we'll put in 500. Then it will confirm the cost of the shares in Uganda shillings. Then select the mode of payment as bank. Now scroll down. Now here it poses a question as to whether this application is financed. So in most cases it is no. You only select the option of yes if the bank is lending you money and intends to put a lien on your shares. But we will advise you to select no. Then it will confirm your bank details, and When you've completed all that, you need to come and view the details of the prospectus by clicking on the prospectus hyperlink. So it will take you to the prospectus, and here we expect you to read through and understand what is involved in this prospectus and what you're signing up to. So if you're okay with what the prospectus is guiding you on, or your broker has taken you through, you will select that you have read and understood the terms, and save and submit your application by selecting save and confirm. So when that is done, you will see the status here changes, and it has the details of your application. Key to note is this reference number. It's the one you're supposed to share with your broker and send them your proof of payment. Then you also have this button that indicates view, and this allows you to print out the details of your application, which you can still email and send to your broker. So that completes your application. So the next and final step is to bank the funds for your application on the details your broker will have shared with you, and then they will be in position to submit your application. Thank you.
What is a share? A share is a piece of a business. Companies sell shares on the stock market to increase funds, to expand and grow. These are companies that make products and services.
Hello! Today we are going to talk about how to invest money through the stock market. Now, when you want to buy shares in any company, you have to go to a market called the Uganda Securities Exchange. And here you will find people that are authorized to help you buy or sell any of those company shares. And these people are called stockbrokers. And anyone who wants to buy or sell shares in any of those companies in this market has to go through these stockbrokers. Now, when you buy your shares, they are kept in an account called an SCD account, or a Securities Central Depository account. But this is not a bank account. No. This one is a special type of account that is created specifically for keeping your shares.
Right.
You don't need to go anywhere to open this account.
Ladies and
You can even
gentlemen.
do it right now on your
Good
phone.
morning. Ladies and gentlemen, good morning. Can each one of you extend your right hand of friendship to your neighbor and tell them good morning and welcome to day 2? Yeah, I said where they greet you without a smile, change the table. The model hasn't yet changed. It means that you are liked on another table more than the table you are at. Once again, my name is Gava. I am here to make sure that we are able to run through day 2. I want to believe that you had a beautiful night. and you had a beautiful day one of the East Africa Capital Markets Conference under the theme Shaping East Africa's Capital Markets Through Digital Transformation and Sustainable Finance. I want to welcome you to day two of the conference. I want to hope that each one of you is energized and ready. Are you excited to have day two? I need to hear some yeses that are loud. Are we excited to have day two? All right. For purposes of taking stock on who is in the room, I want to first start with government. Assistant Commissioner Bob Munene, we want to welcome you. Can you stand up for recognition? They clap for you. Yeah, I am very, very grateful. It's exciting to always see government officials come first at events. It's good precedent. You set the tone. Colleagues from Tanzania, are you in the room? All right, can I request you stand up once again? We show you a lot of love. Can you clap for people from Tanzania? Yeah, very good. Colleagues from Kenya, are you in the room? Yeah, Kenyans. Okay, people from Rwanda, are you in the room? Okay, you stand up and we clap for you. People are now looking at me and they say, why did you tell the Kenyans? Kenyans, you also stand up. Kenyans, can we clap for Kenyans? Very good, very good. People from Ethiopia, are you in the room? Okay, once they are here, we should be able to appreciate them. People from Kigali, Rwanda. Okay, Somalia. All right, and then my very own Ugandan people, can we also stand up and we show ourselves a lot of love? Very good, very good. Welcome to day two. We'll do the protocols as we continue, and I don't want to skip anyone, and I don't want to mess around with the names. We'll continue to do the protocol as we move along. It's exciting to have you on day two of this conference. I'm sure we're going to have a lot of fun. At the end of the day, we're going to have a cocktail. Who is excited about the cocktail? Are we excited about the cocktail? It's a Friday. Excitement should be super. Please note that while I was doing what I was doing, when I'm telling countries to stand up, it's also taking stock of who wants to stay in our country, but who also had a longer night. That's one of the reasons. And I realized that there's a country that has enjoyed Uganda more than the Ugandans. I will not talk about them, but I'm sure that you can notice with the numbers. But let's give a big, big clap to the Tanzanians. They are doing a good job. Yeah. Tanzanians, you've done well. But today I want to think that you'll be able to explore this country. I hope that your bosses or the institutions you represent know that you'll be flying back on Monday. I hope that you're not leaving today evening. That would be a disservice to this economy, because we expect that you spend some Tanzanian money in this. How are we going to raise capital when you are taking it back to your country? You think we are going to save what? You have to spend here, we save on your money, and then we really increase the capital that we invest. So we'll be talking about a lot of things today, but most importantly also to make sure that you understand what's happening in Uganda, where should you hang out, what are the good spots that you should be able to visit before you leave, a lot of national parks, a lot of places that you can be able to go to. And so it's very, very important. Comrades that are coming from different countries, it is wrong. It's wrong. It's morally not upright for you to come in a country and the only thing you do is the conference and you fly back immediately. It is not morally upright. It's not good upbringing. It's bad manners. When you come in a country, take time, go to African Village Craft, buy some things, just do something. So that when you go back home, you show people that you are a tourist, you toured. But this business of coming back and you take life very serious, after the conference you fly back, it doesn't work. So anyone who is intending to do that, tell your neighbor, be serious. Tell your neighbor, be serious. So before we start anything, I wanted to show you a video about Uganda so that you can be able to really appreciate what is happening in this country and why we say you need to visit Uganda more. I'll request my production team to share this video before we do anything else.
Uganda is a fairy tale. You climb up, and at the end, there is a wonderful new world. The scenery is different. The vegetation is different. The climate is different. And most of all, the people are different from anything elsewhere to be seen in the whole range of Africa. I say, concentrate on Uganda. For magnificence, for variety of form and color, for profusion of brilliant life, bird, insect, reptile, beast, and for vast scale. Uganda is truly the pearl of Africa.
You are not going to clap. I'm sure some of the Ugandans, even you who are in the room, you were touring in the video. There are places you've never imagined that they are in this country. So that's really the beautiful country that we come from and that is hosting you for this conference. We want to excite you to be able to visit some of its places. But for those that really are quick on the agenda and have a tight program, there are about 2 places that I can quickly share offhand. If you want to be able to see the top of Kampala, where you see every spot in Kampala, there is a mosque called Old Kampala. The moment you are done with the conference and the cocktail, make sure you go when it is still day. Then you go there. Within 30 minutes, you'll be able to stand at the highest point where you can be able to see the whole of Kampala, for those that have a tight schedule. And so you'll be able to see the scenery. If you have a very good phone that can take a picture, that is breathtaking. The other, of course, that I'll probably want to excite you slightly far, but it should give you a good feel, is Makshon. I've been there. It's quite interesting. I was there because our company is sponsored, so I had to be there. But I'm now trying to also make initiative that as a Ugandan, I start to visit some of these places because there's a lot of fun. And yesterday I also made a promise to you that for those of you that want to understand why Kampala has no day and night, every day is a day. Kampala nightlife. Who remembers the sport? Tanzanians, you don't remember the sport? What's the name of the sport? I said I'll take you. Come again. Kabagala. Anyway, you have done well. you at least remember. So if you told the border man to take you there, yes. So it's Kabalagala. Repeat after me. Yeah, I will be. I know that many of you have contacts for Josephine, but I'm not sure Josephine will be of help. It is me who will be of help. There are quite a number of places where I would want to take you. There's Kabalagala, there's Intinda. I'll probably also take you I'll take you to Waise. I'll tell you why I've taken you there, just to tour and have a feel of Kampala. But as we do this, one of our hosts, the regulator, Josephine Osia, is here. Can we give her a big, big round of applause? So Josephine, you came in the right time. We're just trying to appreciate what day two is going to look like. If we have time, we should be able to also have a recap, a bit of the recap of what yesterday looked like, and I should be able to share with you a few insights, but also gather from you what really blew it for you yesterday. I want to introduce the lady that we'll be working with today, and join me in welcoming Jacinta to just come and say hello to you.
Thank you, Gava. Good morning, ladies and gentlemen. Good morning. It's Friday. Okay, I think I've had more of the Ugandan voices. You're all very welcome, and we're so excited to see you here today. This is day 2 of the East Africa Capital Markets Conference, and I will be your co-host, Jacinta Aquino. I work with the Uganda Securities Exchange as the Legal and Compliance Manager and Company Secretary, and I know we're going to have a great day. So let's partner in making this day worthwhile. Thank you.
The problem with hosting an event with a legal person is that for everything you're talking about or saying, they will tell you the legal binding around it. You know that the Constitution doesn't allow that. So you don't really enjoy the event. But today I'm sure that we'll see how to navigate. So just like yesterday, I want to again invite the Nyonyi Culture Troupe to give us one or two that should start us for our day 2 in about 5 minutes. Then we come back and we should be able to up and five. The reason as to why we also continue to show you these dances is for you to understand the culture in this country. And for those of you that are not yet seeing people, you know that Uganda is well endowed. Please enjoy.
Yeah.
Okay, so thank you very much, the culture troupe, for giving us our first session. Are there Rwandese in the room? Eh? There are Rwandese in the room? I didn't see any one of them even try to do a stroke. I was starting to think, oh, even you were a Kenyan, then you became a Rwandese. You just entered Rwanda after some time. So one of also the reasons as to why we bring these dancers is to also make sure that you can also stretch some of your, body parts, dance and enjoy yourself as we run through this conference. It's part of bringing us home. So allow me invite Jacinta to come. We are going to have a recap of yesterday, just to paint a bit of what Neil did for us yesterday for about 10 minutes, and then we should be able to run our day's program. Thank you.
Thank you, Gava. I realize for much of today I'll keep on adjusting the mic after you talk because you're significantly higher up there than me. So for a recap of yesterday's events, we will have Mr. David Wainaina, who is the head of trading at Nairobi Securities Exchange, who will take us through. He's also the chair of the technical committee of the East African Securities Exchanges Association. A round of applause as David comes to take us through. Thank you.
I'll adjust it, Jacinta, as well. So good morning, everybody. Habari za asubuhi. All protocols will continue to be observed as was read yesterday. Kwa ndugu zangu kutoka Tanzania, itifaki zote zitaendelea kuheshimika. Today, we want to start from where we left yesterday. We had a very, very good session yesterday where we started with our keynote speaker, the commissioner, who challenged us, as a matter of fact, why our regions, our exchanges, our capital markets need to work together. Downstream, ladies and gentlemen, you will note that under the Common Markets Protocol of 2009, we have been required by one of the articles to ensure that there is free movement of capital across our region. And that is the basis of what we are doing here under the theme of one market, infinite opportunities. We want to look ourselves as the lenses of one market. And that is why yesterday one of the things we did is to ensure that we have launched an index. That index has 5 of our top companies across the region. And with the permission of Gava, who is the MC here, I am going to read the companies that are constituting that index, because ladies and gentlemen, after we leave here, we need to start tracking the portfolio of that index. So starting with Rwanda, that has just given us a dance here, the companies that are constituting that index from Rwanda are Braliwa Limited, Bank of Kigali, INM Bank, Simerwa PLC. Straight to Kenya, we have Safaricom, KCB Group, Equity Bank, Cooperative Bank, and Absa Bank. Here at home, Uganda, where we are being hosted very well, we have MTN Uganda, who was also one of our sponsors. We have Stanbic Uganda. We have Bank of Baroda, that again spoke very, very well yesterday and gave us their journey and the benefits they have had from a value proposition in listing at the exchange. We have Airtel Uganda, and we have Quality Chemicals Industry. We stream to Tanzania, we have CRDB Bank, and I think they were in the house. We also do have NMB Bank in the house. We have Tanzania Breweries, Tanga Cement, and Tanzania Cigarette Corporation. Those are the 20 companies that are constituting that index. So ladies and gentlemen, we have some work to do after this by ensuring that, one, we are tracking that portfolio, And 2, in the coming year, we want to have an exchange-traded fund tracking that and giving us the exposure as a region. Once we were done with that, again, and our theme of digital transformation within our region, we got very, very good insights around how the markets are doing from a digital perspective. You will recall very, very well that then our good friends from Tanzania spoke very well about a product they have called Hisa Kiganjani. We have been advised that Hisa is the share, Kiganjani is your palm. So ladies and gentlemen, the message here is again under our agenda of digital transformation, we need to bring our markets to the hand, and we have been guided by Tanzania. It can be done. It behoves all of us to ensure that we do that, because as a region, we have an agenda that we are calling 50 by 30. 50 meaning that we want to have 50 million active investors within our region by the year 2030, and that's why some of these digital transformation agendas are very, very important to ensure that we bring our market to our investors at the comfort of their hand. In the afternoon, for those who are there, we had very good discussions around the ESG. Ladies and gentlemen, we must purpose our markets around sustainable investment. And that is why products like green bonds, gender bonds will be very, very critical as we move forward. We were being told how companies are using ESG, first, to enhance their value, and 2, to put out products that can be consumed by impact in investors. For us, within the region, what we have agreed and was said by our chairman, we will be able to put a regional ESG framework. We have given ourselves the timeline of H1 of next year, so that even as investors look at our region as an asset class, then from an ESG perspective, there is a framework that guides how we operate regionally, and every market will be expected to transpose that within their market. You will recall yesterday, Uganda said that they will have an organic ESG framework that is speaking to Uganda, of course guided by the master the master frameworks, and that is what every market should do, transpose your frameworks based on the needs of your country. But as a region, we will have one regional framework. Of course, it was a very busy day yesterday, and today we have very, very good panels, very dynamic, and without further ado, I want to recall back Jacinta to guide us on the direction of travel today. So thank you very much, and I do wish you a great day ahead. Asanteni sana washukuru.
Right, another round of applause for Mr. David Wainaina, all the way from Nairobi. I remember when I was calling him up to speak, I did mention that he's the chair of the technical committee. A very interesting blend of serious with a lot of jokes. That's Mr. David Wainaina. Thank you so much for that recap. Before we move on to the next item of today's agenda, does anyone want to tell us what stood out for them yesterday? This is not class, is it?
You want to say that it's only Wainaina who was writing it down? I'm sure that there's something that struck it for you yesterday, 1 or 2 people. I think the message is clear. Thank you very much for coming.
Great. Okay, clearly David did a great job on that. Yeah, so we're going to move on to the next item on our agenda. And this is a presentation on SME investment, readiness support, and capital markets growth. This presentation will be made by Mr. Bobo Rugumayo, who is an investment officer at Financial Sector Deepening Uganda. Let's give him a round of applause as he comes up to the stage.
It seems even me, I need to adjust Jacinta. Good morning, everyone. My name is Bobo Rugumayo. I serve at FSD Uganda, implementing the program called the Deal Flow Facility. And Yesterday I was challenged. There were very clever people in the room, and then they told me that you have to speak for 20 minutes about what we do, SME investment readiness, and I said, what can I tell everyone? What can I tell you that you already don't know? So I said, we sat with our team and said, why don't you hear it from the beneficiaries themselves and what we do? So tech team, please play the video. So there's a short video about the deal flow facility, what we do, some of the beneficiaries that we've supported, and then after that we'll get into a short speech. Thank you.
Finding long-term financing, especially for a startup, fintech, is very hard because many financial institutions do not understand what we do, and many are geared towards traditional collateral. They want something tangible to hold on to, which is what we do not have, because our asset, the asset that we have as an entity, is our loan book and it's our technology.
So as a business, we had challenges for both working capital as well as capital investment. Banks try to shy away from startups, and microfinance institutions are too small for an organization like ourselves. So we were always seeking for suitable capital for our business.
In 2020, a market study commissioned by the EU was conducted, whose purpose was to identify why enterprises in Uganda were lagging behind their counterparts in the region in capital raising. This study identified two key gap areas. One, there was a significant information asymmetry in that the enterprises were not aware of what capital raising options there were outside of commercial banking. Secondly, the investors polled identified a lack of investment-ready enterprises in Uganda. The deal flow facility is a bridge between the investors and the investees. So the deal flow facility provides access to investors for the entrepreneurs. On the investor side, the deal flow facility works to support them by developing a ready pipeline of investable businesses.
Truthfully, I think as an entrepreneur, you're never ready 100%. So we had a lot of gaps, I would be honest. We did not have a board, and I think that's something that a lot of investors are looking out for. The governance structure of the business was not solid. The financial statements we were preparing, we did not have a business plan. We did not have a pitch deck.
We needed support to be investor ready, to be that entity that an investor will be interested in speaking to, in looking at, and felt like the DFF would be able to provide us with that kind of service, and that is why we applied. We also wanted the visibility.
We have developed a curriculum on the intricacies of capital raising in the Ugandan market and deliver this through quarterly masterclasses.
The masterclasses that I enjoyed the most was about fundraising. I also enjoyed the masterclass on corporate governance and also the one on valuation. Just being able to understand the different valuation methods that are out there and how investors value businesses.
Through our technical assistance initiatives, the Deal Flow facility supports enterprises to improve their operational efficiencies through elements like financial management, marketing, and corporate governance.
The DFF also advises on the business plan structure, right from how the business plan, how to the inception of the business plan, what do you put where in the business plan, the key things that have to be included in the business plan.
The DFF took us to SunCalp 2024. It was our first time to be at SunCalp, and in the deal room there, we pitched and we were able to speak to a number of investors. Some of them we had been chasing, and also we were able to close a deal with a Ugandan PE fund.
The DFF advised that we should create a drive and put all our documents in that drive, categorized as financial, legal, management, operational, and that really was a changer for, like it was life-changing for me, because I mean, anytime I want to know, if I want a document, I can just access it real quick. So it did not only make life easy for me, it also made it easy for my team at work to always have access to company documents.
Previously, we just had information scattered all over the place, but what the Deal Flow facility helped us was to put together the data room to also, so that it's easy for someone to access, if it's financial information, if it's corporate governance information, to just be organized. And with that, they gave us a paid Dropbox.
They also guided on the setting up of the board. I did not have any idea about why I need a board as an entrepreneur or how the board operates. So they assisted with, first of all, sharing knowledge on the benefits of having a board, the benefits of having a business that's properly governed. And also they shared on things such as the board charter, their governance of the business, and that actually was very helpful.
As startups, we look at corporate governance as an expense or something that takes too much of our time, and we're trying to run a business, trying to prove the concept, and do that. But the masterclass on corporate governance just taught us that it's important to have corporate governance embedded in the business right from the beginning, because it just weaves into the entire process of being able to grow.
We're processing only 1,500 liters of yogurt per day. Right now, with the support that we have got from the investor, we are able to make at least 2,500 liters of yogurt every day.
We have been able to grow. We are currently at the time when we started speaking to the DFF, I think we were maybe around between 50 to 60. Now we are 100. We have grown almost double the number of staff we've had. We now have access to over 100 districts in Uganda, in that we're even on the islands of Kalangala. And again, our loan book revolves 3 times, on average 3 times. So from let's say a $2 million loan book, we're able to disburse $7 million in a month because it revolves.
By December 2024, 44 businesses had been successfully matched with investors, and over 80 investors were participating in the DFF. 4 deals had also been closed. The Deal Flow facility is sector agnostic, and we support enterprises that are registered and operating in Uganda, have at least 2 years of audited statements, generate an annual turnover of at least $250,000, and are raising and can absorb at least $500,000. If you are an entrepreneur looking to raise capital in Uganda, or if you're an investor looking to invest in Uganda, scan the QR code on the screen to participate in the Deal Flow facility.
All right, I hope that is able to just give you an insight into what we do. But today I speak on behalf of the Deal Flow facility, but also on behalf of Financial Sector Deepening Uganda, but more importantly, as part of a regional movement committed to unlocking private capital for growth stage enterprises. When we talk capital markets, our minds often go listed equities, bonds, but beneath and before that, that formal layer, lies a vibrant undercapitalized segment, which are SMEs. We know that SMEs are the engine of a lot of our economies, and before that, they struggle to raise, they struggle to have access to the appropriate capital, and they often fall in what we call the missing middle. So through the Deal Flow facility, we close that gap. We connect Ugandan growth stage SMEs to private capital investors and prepare them to be the next generation of market-ready issuers. A well-functioning capital market depends on a healthy pipeline of investor-ready companies, but the reality that many SMEs lack the governance, the financial systems, and transparency that capital market investors require is still looming. And yet, in Uganda, less than 5% have access to long-term financing. So that's where the investment readiness angle comes in and becomes critical. So as DFF, we work, we've seen that readiness is not just financial modeling, building a nice pitch deck, and as you might have seen in the videos, it's more about building trust with any investor that you're working with, trust through quality financial statements, trust through good governance, and trust through compliance and disclosures. By strengthening these fundamentals, we are indirectly building the feeder system for the next listings of Uganda Securities Exchange. And we're honestly looking forward to working and looking 10 years down the line, what does that look like? Like my brother yesterday, Mr. David Wainana mentioned that private equity and venture capital investors need an avenue for exits. And there's no better place than to go to a willing buyer of over 10 million retail investors across the East African market. So who are investing into their very own companies. So we continue to foster and support that sort of activity. You'll be glad to know that some of our transactions have been equity, private equity, straight private equity, and from 2024 to date, we've almost doubled the transactions that we've closed and even increased the value. So as DFF, we do 3 key things. Pipeline development, so supporting and identifying these businesses, investment readiness technical assistance, ensuring that they have the right governance, the right business models, and ensuring that they have the right transaction structures all the way to their deals. And also, we support transaction support to deal closure now, something which was different from the past. And then, even more importantly, we support market building. So we bring both the investors and the entrepreneurs into one room to identify what are some of the challenges that are being faced and how do we break those challenges. Because we also have to understand that capital markets don't grow in a vacuum. They grow because investors trust, and they trust the systems. They grow because companies demonstrate their maturity, and they're able to demonstrate how they can grow. So by working with these SMEs, we're expanding the investable universe, increasing the pool of enterprises that can eventually list on your stock exchange, issue corporate bonds, and even participate in private placements. So our vision is more of a graduation pathway from private investment readiness to blended finance to eventually public markets. And this aligns perfectly with Capital Markets' strategic objective to deepen Uganda's capital markets, to promote SME listings, and we're already seeing early movement in that direction. Under the great stewardship of Josephine's team at the CMA, Josephine Dixon and the larger CMA team, we're always challenged to see what more can we do and how better can we do it. So a key pillar for us is also sustainable finance. You'll be glad to know that beyond of the 80 investors that we work with, majority of them are impact investors, so they're always looking for beyond the return, what else can we benefit from? So they're always looking at the ESG elements, the impact measurement, and how more can these SMEs grow. As we look forward, we are fostering and supporting regional integration. We'll always identify and see how central it is to sustaining our momentum, and we always look to learn from the initiatives in the region, and we're working in similar fashion, such as the Ibuka program by Nairobi Stock Exchange, the Capital Markets Investment Clinic in Rwanda, and we're always happy to have more conversations on how we can support and how we can learn from each other. Our long-term ambition is to create a harmonious East Africa private equity environment, which ensures that SMEs are able to access the right kind of capital and grow and scale their businesses. And more importantly to you in the room, more listings. That's where we look and hope that 20, 30 years down the line, as yesterday one of the speakers mentioned, that it's a long journey, but it happens, it has to start with somewhere. So in closing, the story of SME investment readiness is pivotal to the story of capital markets growth, because for every SME that becomes bankable and adopts the right kind of structures, they're able to close a deal with an investor who is then able to grow the overall market. So when we invest in SME readiness today, we invest in the resilience, the depth, and sustainability of our capital markets. I thank you very much.
Thank you so much, Bobo. I specifically appreciate that you've thrown light on the SME side, but also on the deal flow facility. And for those of you who want to know more, Bobo is still in the room, and it would be good for you to take advantage of this. As we started this event, we said we're here to network, and we're here to learn more. and share experiences. So I hope that we are all on the same page. And please take advantage of this. We have so many players in the market who are with us in the room today from across the region. So this is the time to exchange those business cards. Let them not stay in your wallet. And let's network and interact. So I'm going to invite Miss Linda Ratangabo from Cornerstone Asset Managers. Linda, in 2 minutes, just to tell us a bit more about Cornerstone. They have been one of our sponsors today, yesterday and today for this event. So thank you so much. Let's give her a round of applause as she comes up here. Thank you.
Thank you so much for the opportunity. My name is Linda Ratangabo from Cornerstone Asset Managers. And Cornerstone is an investment company that is licensed by Capital Markets Authority. And our key focus is private wealth management, fund management, private wealth management, and unit trust fund management. We are very excited to be in the room today. Thank you so much for inviting us to be part of this. So Cornerstone is very keen on expanding investment opportunities for Ugandans. And we have so many companies here that are from across the region, and we're very, very keen on partnerships that we can do. I see there's a very large team from Tanzania, Kenya. Thank you so much for this opportunity, because it is giving us inroads to have conversations with different stakeholders in East Africa, and it is giving us more investment opportunities. We have a table at the back in case you have any questions about Cornerstone or you'd like to get more information. We are very, very happy to have the discussion, and we look forward to the partnership. Thank you.
Thank you so much, Linda. We'll be calling out a few of our other sponsors as the day goes on, because we must recognize them and we want to show our appreciation. Yes, so as we get into the rest of the program, allow me to recognize the presence of our CEO, Mr. Paul Biso, who is also the chairperson of the East African Securities Exchanges Association. Guys, a round of applause. We are the hosts. Yes. That's much better. Paul, you're very welcome. And you're right on time. We are going to have a presentation from Mr. Dennis Chizito, who is the Director, Supervision at the Capital Markets Authority. And because he's my regulator, I think we need to clap and welcome as he comes up here. Dennis, you're very welcome.
Thank you, Jacinta, and thanks everyone for making it to this East African Capital Markets Conference. I have 20 minutes to talk about the trends that I would say I personally am seeing in the financial services industry. But I'll start by ensuring that we are one spirit, East African, by greeting you in your respective constituencies. For Uganda, I've already greeted using the national language. Then I'll move on to Kenya, Abali, vizuri sana, Abali zaidi, Tanzania side, and then Mwaramute. That is the Rwanda and Burundi. I'm trying to combine the two. So before I make this presentation, allow me make a few disclaimers. One is that the views that I'm expressing here are my own, and they are not anywhere. They should not be associated with my employer, that is the Capital Markets Authority. I thought I had to make that clear because some of them might be itching a little bit. The other one is that I have just made a few notations on the slides. I'll be doing a lot of speaking, of course, within the limited time that I have. Okay, if that is acceptable, we'll move on. The tech team, where should I point this? Is it on? Which side? Okay. Which side? Okay, thank you. So I'll just be speaking about those three areas, basically. The regulatory landscape, specifically from the Ugandan angle, but I'll also make a few mentions of the other jurisdictions, as you may have seen in the newspapers and the social media outlets. The big theme of digital transformation that is splitting hairs everywhere and putting the central banks under too much tension, but also the tension is seemingly extending to the other sectors of the financial services industry. Then this has kind of become a common theme. It continues to gain traction, that is sustainable finance, the ESG agenda. I think the previous panel discussions and presentations have taken you through the market statistics from the Ugandan perspective, but I'll just point you to the CIS. Those are the collective investment schemes. Uganda has hit the AUM of 4.6 trillion, and that is equivalent to about $1.2 billion. It is just a figure, a statistic, but there is more behind that figure. From a market development perspective, if you ask yourself, why is Uganda seeing this exponential growth? It's because the market, more so from the investor's side, the market is showing the regulators where to look and where to focus more resources. This CIS, or the Collective Investment Scheme product, is one of those products that I personally would say responds to the common needs of a common man out there. And personally, having been looking at the market for some time, I'm not surprised that we are seeing such exponential growth. So the quest now is on the side of the regulators, learning from Uganda, and Uganda also to learn from its own discoveries, how to ensure that we come up with products that respond to the social, economic transformation needs of the people. You know, there is a tendency for markets to be taken as for the educated, for the sophisticated, but if you look at the history of markets, that's not the story. I don't know who started that analogy that markets are for the sophisticated. But the market is showing us where we should be looking, just from these statistics. I will talk briefly about the regulatory alignment from a Ugandan perspective, and I think this applies to all of us in the region. The principles are gotten from IASCO, International Organization of Securities Commissions, but IASCO does not get these principles that guide our regulatory frameworks from any other place, but it is from what IASCO is seeing as the trends that are coming up from the different players in the market. So the IASCO principles and a few other organizations or associations do dictate what the regulators should be focusing on as they continuously recalibrate or enhance their regulatory frameworks. For Uganda, we've seen quite a number of responses. The sandbox was launched last week, and this is because of the innovations that are happening in the market. Previously, regulators, I think in Uganda, in East Africa, it was Kenya to take the first mover advantage when they introduced their sandbox, and we've seen the other regulators taking the same route. But before that, we used to have very restricted or strict frameworks, which made innovation almost something that was hard to come by. But as the market has continued demanding, and of course the standard setters coming and introducing principles to enable the regulators to comply, we've seen regulators start to kind of make their frameworks a little bit more flexible to ensure that innovation is enhanced. I'll speak to the sandbox, but there are other things that are coming for Uganda, the Sukuku guidelines. We also have ESG guidelines coming. So there's quite a lot that is in the pipeline, all in the name of making the framework more innovation based or facilitative. Regional integration, the theme of this conference is one market. It is very good to say, very hard to come by. Because as we speak right now, if you take a count, we have 39 exchanges in East Africa. And when you say 39 exchanges, someone would think, because usually it's appropriate to think that each country, one exchange. But that's not the case. The 39 exchanges are coming from 28 African countries. That goes to tell you that the market is deeply segmented. And the West has always been calling upon us, because the West, regardless of whatever fancy interventions you have as a regulator in your respective jurisdiction, the West always, and that has been their stance for quite a long time, that they look at Africa as one country. So that calls upon us to really think and make efforts towards having an integrated market. Because the more we are going to continue being segregated, having segregated markets, even within our own countries, segregated markets, we are continuously going to be unattractive for capital to flow in East Africa. And if you ask me where capital is needed, it's in the sub-Saharan Africa. But those people, most of capital is locked up because of the segmented market. So all we need to do is to further the efforts to integrate so that we can start to partake of those capital, so that we can see traction on furthering socio-economic transformation of our countries. Of course, at East African level, the integration of markets, I think the latest that was recorded was the designation of directives, market directives. However, the initiatives like the creation of the regional market benchmarks, like the EAE 20 share index, which was launched yesterday, that shows you that there is positivity, but it is also need to fast track to ensure that the markets are integrated. In the West Africa, if you look at West Africa, they are really making good progress towards integration of their markets through the West Africa Capital Markets Association, Integration Association, sorry. In terms of disruptions, I'll call them disruptions for lack of a better term, but also that's what they are, because they kind of challenge the status quo. And I'll just make a few comments on this. And I will start from the banking sector. What started as digitalization of payment systems, as simple as it looked, now is pushing for revolutionization or rethinking of traditional finance. We are now having discussions around decentralized finance, of course leveraging on the blockchain networks and technology. But what that means is that there's going to be disintermediation. And you know what that means is that the credit creation process is going to be affected if decentralized finance is going to be the new norm. And you know what that means for the banking sector. So because of that, we've seen the central banks coming up to ensure that they come up with something, an amendment of the traditional finance, which has been basically based on fiat money, to counter the so many stable coins that are mushrooming every day, that are threatening the existence of traditional finance. So there is a lot of talk and a lot of rejigging or rethinking of the regulatory framework. I know that when virtual assets, call them blockchains, virtual assets and blockchains, when they are coming up in the early 2000s, every regulator used to shun them. Some central banks came up with public pronouncements restricting their usage and disassociating themselves with them. But seemingly, they didn't cowardize. They continued to go at it. And today, we've seen regulators coming up with initiatives to ensure that they recalibrate their regulatory framework to ensure that virtual assets, of course running on blockchain, is something that the regulatory frameworks cover. So we've seen the enactment of the Genius Act in the US. We've seen the MiCA regulations in Europe that are seemingly laying a ground for decentralized finance. Now, the proponents of decentralized finance, they want to have their cake and eat it. They want to kill the fiat money, call it traditional finance. But we've seen debate around a middle ground, a meeting halfway. We've seen the pros and cons of traditional finance. And then we also see the cons of decentralized finance. There is a need to meet in between. And in the debate, in the continuous debate that is ongoing, we are seeing things like regulated liability networks coming up. The central banks are coming up with CBDCs projects to the extent that some central banks, Nigeria being one of them, and I think Ghana, if I remember precisely, have come up with central bank digital coins. What that shows is that the pressure is too much on the central banks. And I think even Uganda is also started the project of coming up with a digital currency. So what this means for the other segments of the market, of the financial services industry, is that the risk of disintermediation that is arising from decentralized finance is, on the other side, amplifying the role of capital markets in the economic development. However, markets have to be recalibrated to respond to the developments in the banking sector, more so from an infrastructure look of things. So that's what I have to say about the disruptions. There are so many, but I thought I would approach it from the side of the banking sector, because really when you ask, we are in the markets, and markets trade securities. But the securities, the underlying is the money. So whatever happens to money should also put up our antennas to see how we can respond. This is something that is close to my heart that I will talk about, and it's happening in Uganda. We've heard about the call for political will in the development of markets. One time I attended a lecture, and the professor was saying, you can do whatever you want, but there are two things that you need to attend to as you develop your market. One is political will, the other is patriotism. Now, except for a few brothers of ours, and to be specific, that is Kenya and Tanzania, Uganda has been lagging a little bit behind as far having the good traction on the political will side to move markets. We've seen quite a number of initiatives in Kenya and Tanzania being fronted by government. But Uganda has been a little bit lagging behind. So when the Vision 2040 came and the National Development Plan, and the Vision 20. The National Development Plan is the tool that is being implemented by government to ensure realization of Vision 2040. And when you look at the Vision 2040, if I'm to go, the vision seeks to increase GDP from $50 billion to $500 billion. It's a bit ambitious, but when capital is available, it can be achieved. And I'm quite optimistic that if capital is made available, we may not have to wait for 2040. That is my personal opinion. So the target is 2040. And the government has laid out a number of sectors or areas in which it thinks that Vision 2040 should be achieved. That is agriculture, tourism, minerals, innovation, science, and technology. And the capital markets, this is the highlight for me, and maybe for a few other people. Capital markets have been identified as a channel for capital raising to support the strategies. So the linkages, such linkages show that the capital markets role in achieving Uganda's structural transformation and the GDP target. Now, once government starts to associate its development agenda with capital markets, we can say, and we can all agree in this room, that political will is starting to gain traction. I only believe and pray that it will continue. And I also pray that the markets will be able to fulfill what the government, to support the government in achieving its agenda. I'll jump a few slides in the interest of time. I'm running behind my time. Sustainable finance. This has been talked about. And this has been with us for a long time. But seemingly, when you look at the market statistics in the region, we've had a few transactions that are ESG based. So what this means is that as regulators and market developers, we need to put in a little more fire to ensure that we have a wide spectrum of products that are going to attract capital to come into our markets. We've seen the changing behavior of investors. People are now calling for alternative financing, away from the normal plain vanilla products that we've been having in the market. And also the digitalization and the innovation that we are seeing in the market has also been a catalyst for the changes in investor behavior, and that has led to more demand for more appealing, more products that can appeal to the local or to the common person out there. And ladies and gentlemen, I think I'll end at that. I have some other slides. This one I've talked about. The digitalization has led to other emerging trends like soup tech on the side of regulators and RegTech on the side of the regulated. But in the interest of time, I think I'll end there. And I thank you for your attention. Thank you.
Thank you so much, Dennis. A round of applause. Right, so before we move on to the agenda, I'm just checking. Guys, are we still together? Okay, great. So we're going to have just a few remarks, but before that, I would like to recognize the presence of Dr. Julia Claire Oyet, who is the CEO of the Deposit Protection Fund of Uganda, who are also our sponsors. Dr. Julia, you're very welcome. We're so excited to have you here. And we also want to recognize the presence of Mr. Wycliffe Shamia, who is the CEO of the Capital Markets Authority of Kenya. Mr. Shamia, we're very happy to see you here. You've been with us for 2 days. We do not take that for granted, and we are really happy that you've given us your time. So we're going to move on to 2 minutes. Very key on the 2 minutes. But one of our key sponsors, NMB Bank, PLC, all the way from Tanzania. I thought we'd clap for that. Yes, this is a regional event. So NMB Bank have been one of our key sponsors in this event. And so we're going to give them 2 minutes just to come and say something to us. Production team, I am informed that there is a video.
Welcome to NMB Bank, Tanzania's trusted financial partner for over 25 years. We empower investors through our security services, offering custody, registry, CDP, and brokerage solutions that streamline trades and shareholder management. Our expert team ensures seamless onboarding, trade settlement, proxy voting, and precise portfolio reporting, all regulated by Bank of Tanzania and CMSA. As lead transaction advisors, we structure and list bonds on top exchanges like Luxembourg and London, connecting you with offshore investors. NMB Bank, your strategic partner for sustainable growth and investment success in East Africa.
NMB Bank, close to you.
Right, so ladies and gentlemen, join me as I welcome Miss Rahma Bakari Mwapachu, who is the head of marketing, communications, and corporate affairs at NMB Bank, Tanzania, to say a few words to us. Rahma, you're welcome.
Thank you very much. Good morning, everyone. Maybe we do a little bit of an exercise. Now, I would want you to stand up, if you would please. Now, since it's NMB speaking, I would like you to put your hands on your hips, and you're going to spell out N, M, B. Nice. Thank you. So allow me to stand on the protocols already observed. Again, ladies and gentlemen, good morning to you all. On behalf of NMB Bank PLC, it is a great honor to join you today as a proud sponsor of this important conference. This conference provides a vital platform for exchanging ideas and forging partnerships that will define the next chapter of our region's capital market evolution. At NMB, we believe that the future of capital market in our region depends on innovation, collaboration, and sustainability. The region capital markets hold tremendous potential, and by harnessing the power of digital transformation, we can unlock inclusive growth, enhance transparency, and as well as strengthen investor confidence. As a leading financial institution, NMB remains deeply committed to advancing sustainable finance that delivers not only economic returns, but also support environmental stewardship and social impact. Through our flagship Jamii Bond, I think yesterday you heard a little bit from our colleague, Ed Gandani, the bond that we have put in the market a few years ago, the bond attracted over 5,600 investors, locally and internationally, collecting a historic amount of 400 billion T-shillings. A round of applause, please. From both TZS and as well as USD tranches. This was more than 3 times the amount that was earlier approved by the Capital Markets and Security Authority, CMSA, and it was the largest East African sustainable bond at that time, and the first largest listed bond in the Dar es Salaam Stock Exchange. Another round of applause, please. Having raised such an amount in the history of capital markets in East Africa and Central Africa. The bond was also listed on the London Stock Exchange and the Luxembourg Stock Exchange. Beyond our role in expanding access to markets, we did not come here empty-handed. We have a full suite of institutional and capital market solutions designed to support issuers, investors, and as well as intermediaries. The team from NMB, I'm here with my colleagues, there were 7 of us, will be able to provide you with support with custodianship, fund administration, share registry, treasury solution, FX and transaction advisory services. So we have a booth outside, so whenever you're free, you can pass through, and our team will be able to provide you with these services and advisory. On behalf of NMB Bank PLC, I extend appreciation to all participants for being part of this important dialogue. Together, let's continue to build a future where finance empowers people, businesses, and communities, sustainably and exclusively. Thank you, and I wish you a fruitful and inspiring conclusion of this conference. Thank you very much.
I feel like this is a setup. And Jacinta, well done. Because how do they call you to speak after a powerful speaker from NMB? When you compare the accents, some people can make you feel like you didn't attend school properly. Yeah, but I have no choice. Jacinta, well done for the setup. Well done. Because I was wondering where Jacinta is pushing me, Gava, you're next, Gava, you're next. Like, what's the intention? And now, while I was walking up, that's when I figured it's a setup. But well done, NMB. I'm still proud of the job my parents did. Despite the accent not coming out, we shall be able to really cope up. Without wasting time, if you look at our program, we are a bit stretched on time. So allow me and save the protocol and the lengthy conversation. I'll just invite these panelists quickly, give them at least a minute to introduce themselves, give them 30 minutes exactly, sharp, so that we can be able to have our panel move to our next part of the program. Allow me invite the head of Forex trading from BOU, Mr. Timothy Nkata. I don't know if he's in the room. Okay, allow me move to the Director Market Development, Mr. Dixon Sembuya. That one I'm sure he's in the room. This must be CMA. Yes. Yeah, that one I knew he must be in the room, because if your CEO is in the room and you're not here, that's how you enter unemployment for no reason. So that one I was sure. So allow me also invite the CEO of CMA Kenya, Bwana Wycliffe. Can we welcome him with a big clap? And allow me invite the Chief Manager, Supervision and Market Conduct at the Uganda Retirement Benefit Regulatory Authority, Daisy Linda. And also allow me invite the Assistant Commissioner from the Ministry of Finance, Planning and Economic Development, Mr. Bob Monene. Yesterday I said that our choice for clapping should be clear. We are either clapping or not clapping. Are we clapping or we are in between? I think we continue to move in consensus. Once we agree that everyone who will come to the stage or the podium, once we look at you, know we are deeply happy. That if we are choosing that we are clapping, let us clap and show people the love. Allow me to invite now the moderator, Senior Research and Market Development Officer from CMA Uganda, Terence Tumwine. Can we give him a big, big clap? Terence, as the host, your 30 minutes begin ticking now. Do your best. Thank you very much.
Thank you very much, Gava. I don't know whether for me it's a setup because the background seems to be dark. I'm dark. But I'll make an effort to moderate this. Thank you very, very much, Gava. Thank you very, very much to the organizers for this. A round of applause for the organizers. I think this was no mean feat. I think it was really, really beautiful. You're welcome, all of you. Please pardon me. I must put a disclaimer. Bear with me. I'm moderating a very difficult panel for my part because my boss is right here. And then what is more difficult is he reports to the CEO, and the CEO reports to our boss, Bob. So it's a very, very difficult one. Bob, who is with the Ministry of Finance. But I will let the panel really introduce themselves to just let the people know who you are briefly, and then we can be able to get into the discussion. I will start with, obviously, Mr. Dickson Sembuya.
Thank you very much, Terence. Ladies and gentlemen, good morning. And do allow me to stand on the protocol established earlier on. My name is Dickson Sembuya, Director Research and Market Development at the Capital Markets Authority. And I think before I say anything much, I would like to start by thanking all the partners and thanking all those who conceived this particular idea. I think it's a brilliant idea. It's a good platform where we get to share so many ideas. And I think just from sideline chats yesterday, I must admit, there are several misconceptions I had which were corrected. I mean, around commodities exchanges, what they are, what they're not. I think it all became clear. So this has been a really productive engagement. It's been quite edifying. And, kudos to all those who've been able to put this together. And, I'm also so happy to see so many familiar faces. My bosses, my CEO is here. A very key stakeholder, Bonabuisa is here. Mr. Shamia here on the panel. Very delighted to see all of you. And, we're looking forward to, having a productive engagement, demystifying some of these issues. And I hope, and basically, I want to throw a challenge to all of us. I hope that, we'll have very clear resolutions coming out of this. And so that at the subsequent ESC conference, we're actually able to track how far we've moved. That is my only prayer, that, we should be able to track whatever we've discussed and see what comes out of it in the subsequent engagement. Thank you.
I hope you can hear me. Just to say, first, I think we need to thank ICEA and CMA Uganda bringing us back to the ESC Capital Markets Conference. Initially, this was done in Rwanda some years back, and I think for some reasons we lost track. And it is good that exchanges are bringing us back on track. I'm Wycliffe Shamia, CEO CMA. I've been in this market for very long. Some of you, maybe when I became an employee, you are maybe in school, early school, or before you were born. I've done 30 years in capital markets. I've seen all the markets. I've worked in all of them. I've been in Uganda, Tanzania, Rwanda, very, very recently, Burundi, in the spirit of trying to establish markets within East Africa. And I'm happy to be here today just to share. But the spirit will be, we need to look at East Africa as a one market. The only tragedy we have today is we have no one, or if they are there, from the ESC Secretariat. I think we need to find a way of having this voiced very strongly, because on our own we can't integrate. We require ESC Secretariat to work with us. Thank you so much.
Thank you very, very much, Shamil. How about you, Daisy?
Good morning. My name is Daisy Linda Navakosa, and I work with the Uganda Retirement Benefits Regulatory Authority. And I will concur with what the two speakers have already said and end it at that.
Thank you, Daisy.
Good morning. My name is Bob Mnene. I'm Assistant Commissioner, Financial Services and Ministry of Finance. I want to thank the organizers of this event. As a policymaker, excuse me, when the public understands capital markets and we no longer have people who are saying my roadside market was not developed, was excluded, that is a plus to government and to the entire nation. I thank you.
Thank you very, very much from the policy side, Bob. I will really start with Dixon. You talked about demystification, and those on the side charts. Just help us, the rest of us, maybe also appreciate what an effective infrastructure looks like for the capital markets from your angle as the Director of Research and Market Development. Dixon.
Thank you, Terence. I think to start off, I would want to just unpack what financial markets infrastructure is. And when you talk about financial market infrastructure, you're talking about, the clearing, settlement infrastructure, the payment system, you name it. And the whole idea behind the financial market infrastructure is to facilitate transactions within the capital markets, facilitate liquidity, netting, you name it. Now, to your question on what effective financial market infrastructure is, I think I'll defer to the International Organization of Securities Commission's principles around financial markets infrastructure. I think my colleague who presented previously alluded to IOSCO, which is a standard-setting body for securities markets, and it has principles around financial market infrastructure. There are a couple of key pillars. Among them is a legal regulatory framework. I think for financial market infrastructure to be effective, you need to have a clear legal regulatory framework that guides operations, ensures that risk is properly managed, you name it. Another pillar around financial markets infrastructure, effective financial market infrastructure, is the technology leg of it, from the depository that will facilitate record keeping, the clearing, the settlement aspects, you name it. Then another key pillar is people. I think you need to have the right guys within the market, from investors, market intermediaries, those who operate in the systems, etc. You need to have the right people running this infrastructure. And I think lastly, issues of governance. I think you need to have very clear rules pertaining to the operations of financial markets infrastructure, and you also need to have, the governance should actually lead to proper risk management. I hope I've done some justice around that.
I think you've done very good justice. And speaking about the different players, I think that also helps us appreciate how each one of us can come into assisting the infrastructure to work very, very well. But also, in addition to that, from where you sit as the Director of Research and Market Development at the Capital Markets Authority, we noticed that, I'm conflicted, but we noticed that you recently launched the strategic plan sometime in August. What are you looking at? What keeps you up at night? What are you focusing on for the next 5 years, at least for the market to also appreciate?
Thank you, Terence. I think considering the level of engagement me and you had with respect to the strategic plan, you're probably better off addressing that particular question. But nevertheless, CMA launched a strategic plan for the next 5 years. And this particular strategic plan is anchored in two key blueprint documents or blueprint strategies. The first strategy is the tenfold growth strategy that my colleague talked to. And this particular strategy aims at growing our economy. Currently, it's about $63 billion to about $500 billion. And the four sectors that will drive this particular very ambitious dream, agro-processing, tourism, mining, oil and gas, as well as science and innovation. And again, for you to finance or for you to achieve this particular ambitious project or strategy, you need finance, and not just any type of finance, but innovative financing. Okay, we need to think outside the box. Okay, now this particular strategy is operationalized through the National Development Plan 4, NDP 4, and this particular plan that operationalizes the strategy has a lot of emphasis on innovative financing. Okay, so there's a lot of emphasis on innovative financing, from Sukuk, ESG, and I think ESG has been a theme here, climate finance, etc., to be able to, finance that transition to a low carbon emission economy. So our strategic plan is actually anchored in those two particular blueprints. So the emphasis is really on innovation or innovative finance as a channel of raising the much needed market-based financing to facilitate, the expansion of our economy. There's also emphasis on automation. I think automation from the regulator's perspective, automating our own operations. Then there's also that realization that capital into Africa, as years go by, is going to flow through digital assets or digital means. Okay, and so we can't be left behind, and we need to have, the necessary infrastructure. We need to have the necessary regulatory framework that will recognize digital assets through which market-based financing of the future will flow into Africa. I think in a nutshell, those are some of the key highlights, but the key emphasis is being able to facilitate the tenfold growth strategy as operationalized through the National Development Plan, and this is underpinned by, innovation and automation.
Yes, and I must let you know that when you spoke about innovative finance, I saw Sheikh Issa shaking his head and nodding. Yes, this is the kind of Islamic finance that we need. Just for those who don't know, Sheikh Issa is a consultant in Islamic capital markets. I want to move to the regional level. He's based in Tanzania, and he's also part of this conference. On the regional level, we want to tap into the 30 years of experience. As far as memory will allow you, briefly it was talked about East Africa Regulators Association. It was established. You've talked about capital flowing across the region. Have you achieved any successes from this formation of the association? What do you envision from that association? What are you seeing from where you sit, Shamia?
Thank you. By the way, for us to be here today, that is one of the success that we speak about.
A round of applause, ladies and gentlemen.
Regulators in the market normally work with the main institutions. So we regulate markets, and the markets are exchanges and operators. That is why you see there are exchanges here, there are CSDs here, there are also players here, associations, I believe. For regulators, we follow the principles laid down by IOSCO, and I think for those who may not be directly in market regulation, IOSCO stands for International Organization of Securities Commission, which is the main standard setters in securities markets and capital markets. We all are supposed to be members. It has a number of principles. As it is, at one point there were 38 and they continue to increase. But if you look at the basis, it's about how you ensure the markets are orderly, efficient, and then there is the issue of systemic risk, and then investor protection. Now, when you look at this, there is a lot you speak about on cross-border cooperation enhancement, because that is, we don't live in silos. In 1997, I think it was desirous that the main markets then in East Africa, that is Kenya, Tanzania, and Uganda, started talking. And in March, I think they came together and signed an MOU. The MOU was about how do we work together. And for you to work together, it is around how you harmonize applications, how you harmonize your legal provisions. And then, of course, there is the issue of support, there is the issue of capacity building. Now, in 1997, I remember Tanzania, a very strong man, the CEO, Dr. Fraten Mboya. I'm sure most of the Tanzanians here will not know him, but he worked along a very strong team, Kibola, Abayo, Jau. I think those are the teams we saw from Tanzania then. Uganda, of course, we had our own Chafez Kato, who is a strong man. I'm sure in Uganda you know him. And around him, we also saw very strong personalities. Kenya, we got Paul Meli, and of course, so we worked together. What have we got? We started as three. In 2009, Rwanda joined. 2011, Burundi joined. Now, this was not along ESC protocols. This was just among market regulators. But as ESC has come in, we also draw other members who are members of ESC. And now we have Somalia, and we will, and I'm sure my chair is here, we will be approaching them, DRC Congo, and also, of course, Southern Sudan. I'm sure Ethiopia is also interested in joining us. So if you look at this, the efforts which started in 97 are creating a region. And what we want to see is a region of around 500 million people. And when you speak of a market, I'm sure this is what we want to see. Now, we are here today because we can support each other. If it is in terms of skills, in terms of law, in terms of, applications, we speak to each other. So for me, this has been so successful. And in fact, it would have been even better if Burundi had formally launched their market. By the way, for those who are here and you are business people, as regulators who stand where the government is sitting, to us, this is very critical. And I think, let me stop at that because of time.
He speaks with passion and clarity in terms of the success of this event. Just so that you know, ladies and gentlemen, the chair of the IASRA is in the room, in case you were wondering. Madame Josephine Okoye-Osia, please raise for the people to get to know who the chair is. But yes, the chair of the IASRA committee. We'll move to the pension regulator. Patrick was here yesterday. He spoke heavily on how the pension sector is invested heavily in various aspects of the capital markets. And in addition to that, you play a very key role in the development of capital markets. But also in addition to that, ladies and gentlemen, allow me inform you. This one I really need to pause. Yesterday, ABSA AFMI index was launched, and Uganda rose up to the 3rd position from 4th position, which I think is a very big, we've been at 4th for about 3-4 years. I think it's something worth noting. So we rose up to about 3rd position. But even after we've registered that success, I want to put it to Daisy. We can get to number 1, but we still seem to be lagging behind on the pension sector development. And we know that there's a lot that UBRA is trying to crack. What are you doing to be able to unlock the pension sector? But also, how can the pension sector participate in the capital markets further beyond what it's doing right now?
Thank you, Terence. You also forgot to mention that in that AFMI report, Uganda rose from the 19th position to the 26th, from 26th to 19th in terms of pension development. So it's also a plus, isn't it?
Plus. That's a plus.
Anyway, so that AFMI report highlights some challenges that I think are not just Ugandan-related challenges, but challenges that span our whole continent. And I think yesterday there was a lot of talk about things like public awareness. In that report, they highlight that there is a challenge of financial literacy. I strongly believe that it's not an issue of financial literacy, it's just that we have not demystified our products, to the people to actually understand what it means to them. So it's not really an issue of financial literacy challenges, but the issue of understanding the actual products that are there. The report also highlights the inflexibility of most of our regulatory frameworks, and you find that we are not tapping the right East Africans. If you have more than 18% of your working population in the informal sector, and you find that most of it is not tapped. So I think that also is really one of those challenges. And of course, the emerging, you won't say problems, but things that are emerging that seem to ask us to rethink how we are doing things, things like technology, things like the products that we have. So, and what UBRA is doing, I'll really speak especially about the challenges that the AFMI report of 2025 highlights. Public awareness, every regulator, every policy maker, I think everyone in this room knows that they are putting time to public awareness. But I think as UBRA, we're now going into skewing that public awareness to the different audiences. Because previously the audience was save for retirement, save for retirement. But now when I go to CMA, I'll say it different in terms of what CMA needs to hear about saving for retirement. When I go to the market, I have to say it different to the person in the market for them to understand why that saving is important. And I know, of course, in line with the 2040 vision, NDP4, especially on the Ugandan side, we're looking at bringing in money for capital development. But we also need to remember that in the terms of retirement, it's not just for government to benefit. It's for you and I to make sure that at age 60, 80, we are still able to sustain our lives with whatever we saved. And we don't want to lose our eye on that ball. The other challenge that was highlighted in our report is coverage, of course, and I think really yesterday there was a lot of discussion about coverage. Coverage for the pension sector, coverage for the capital markets, coverage for insurance, and it's an issue that we have to tackle together because it's the same audience that we're reaching out to get into our different financial services subsectors. And UBRA in particular is, you talked about a strategy for CMA. We also launched our strategic plan.
Congratulations.
And in that strategic plan, one of our key focus areas is the informal sector. And I think Mr. Ayota talked about that yesterday. What products are we putting out there to make sure that everyone benefits? Do we have products that are fit for purpose? But also, have we scoped that sector to ensure that we are actually meeting their needs. I'll share with you an example, for instance. We recently had an engagement with an upcoming informal sector scheme, and it's targeting market workers, markets all over Uganda, from Nakawa to Arua to Mbarara to wherever. And in their association, because they're actually quite very well organized, they spelled out some of the challenges that they have that we may not see in our formal pension, planning. Things like burial. Can you imagine? So those market workers are saying, after I've worked so hard, I ought to be sent off really well. At the very bare minimum, can I have some sort of input from the people that I've worked with? So you find that that particular scheme has curated a product that tells this person, as you save, a portion of what you're saving is going towards your send-off. And people are welcoming that. Plus, of course, there are things that come in medical, education. Basically, the point is the products and the structure that you adopt has to be something that meets the needs, and that's one of our key priorities. We're also looking at, in our strategy, ensuring that we have that flexibility, because like the AFME report clearly spells out, most of the frameworks that we have put in place are skewed towards the formal operations. Now we're looking at this informal person. How flexibly can they access your market or your product? Contributions coming in and benefits being paid out, making it easy for them. That means you have to go into technology. But of course, not forgetting the fact that we have to look at things like the regulatory landscape to provide for that framework to actually thrive and to protect those members, because high on our priority is safety for those members. Thank you, Terence.
I think she highlights a big point. So it's not just saving, but it's also some sort of a social security and framework to allow them to access some of those other nitty-gritties beyond saving for retirement. Thank you very, very much, Daisy, for addressing that. Dr. Bob, just so that you know, Dr. Bob is also on the board of the Uganda Development Bank, so he's wearing very many hats today. But in your capacity as Assistant Commissioner at the Financial Services Department, there are things that you have sight of and things that you desire also to see from the capital markets perspective. How do you see the interplay between, one, the big, expensive, or the big ambitious goals that are in the NDP and the opportunities within the capital markets? And how can government leverage the capital markets as an opportunity to raise capital? Bob.
Thank you, Terence. As you are aware, Uganda developed the tenfold strategy to grow the economy from $53 billion to $500 billion in the next 15 years. It's a really an ambitious strategy, but we hope with the sectors that we chose to invest in will achieve it. One, government intends to focus on agro-industrialization, oil and minerals, tourism, then science and innovation. These are sectors that require long-term investment and therefore need patient capital. We all appreciate that the global finance landscape has evolved. The concession loans are limited. Now the only way is to look inward. And how have we done it? We developed what we call the public financing strategy, where we are looking at developing guidelines for Sukuk, where we want to issue a Sukuk bond under Islamic finance. We hope this can finance some of the infrastructure projects Then we are looking at also the diaspora bond, where we can attract our Ugandans living abroad to invest in this and bring money back home. We know our neighbors have done it, and we can also do it and attract capital. We are looking at also infrastructure bond. We are looking at infrastructure bond, for example, to invest in low-cost housing. We know Kampala has some slums which we, as a government, which we need to erase and develop acceptable housing standards. Those are the policies we are envisioned, which we can tap through the capital markets. But also we are looking at the commodity exchange framework, where we can use warehouse receipts to access credit. Thank you.
Thank you very, very much, Bob. Those are, each one of the points, I just saw a big vision, a big pipeline of many players participating in this. Thank you very, very much, Bob, from the policy angle and guiding on what government is looking at. As we try to bring this to a close, I just wanted to appreciate two things. To Dixon and Shamia, private and public markets. We had a presentation from the deal flow facility, and everywhere we go, we're always asked, when are the listings? When are you having more listings? The pension sector is looking for opportunities to invest. Private and public markets, how have you seen them the past 5 years? Where do you see them in the next 10 years?
Thank you, Terence. I think I'll start from a global perspective, and I think globally, what we are witnessing is the shift from public markets to private markets for quite a number of reasons. I think in a country like, I think, the States, which might not be a good comparator, but we could just look at those figures. I think about 15 years ago, they had about 10,000 listings. Last I checked, about a year ago, there are about 3,800 listings. So there's been a shift from the public markets to the private markets, and some of the reasons are the regulatory costs that come with being publicly listed. Reporting requirements in the States, you have to report every 3 months, and that puts a lot of pressure on companies and their CEOs. So that has seen a move towards private markets in those particular more developed markets. Now, turning back to Uganda, I think over the last 5 years, if we were to look at the statistics, the public markets raised about 1.1 trillion in fresh capital. Now, if we look at the private markets, on the other hand, the private markets were able to raise about $400 million, which translates to roughly about 1.4 trillion shillings. So it seems a bit balanced. Now, how we're looking at this from a capital markets and development perspective, for us, we consider private markets as a good feeder for the public markets. If we want to create a pipeline for the public markets, then it's imperative that we focus on developing or facilitating their private markets. And the government of Uganda has actually taken several steps to facilitate the private markets, from tax exemptions. Private capital funds enjoy a lot of tax exemptions, from exemption from stamp duty when they buy and sell, holdings, exemptions from capital gains tax, you name it. So all that has been to incentivize the private capital space. Additionally, we recently saw the promulgation of partnership regulations. And what those regulations have actually done is to operationalize limited partnership provisions within the Partnership Act. I mean, globally, most private capital funds are set up as limited partnerships. And the whole idea is that when you're set up as a limited partnership, then you become an efficient vehicle for taxation purposes, or a pass-through vehicle for taxation purposes, which we had which we didn't have as a country. So with that, we should be able to see a lot more domiciliation of private capital funds within Uganda. And the hope is that private capital funds should be able to exit through the private markets. But therein also lies a complication, which is probably something that we might need to address. And the complication is, why aren't private capital funds exiting through the public markets? Well, we've had a few cases. I think Umeme was a private capital fund exiting. CIPLA was also a private capital fund exiting. But that was more of the exception rather than the norm. So the question is, what do we need to do in order to attract private capital funds to exit through the private markets? Now, there are so many reasons when you engage these guys, which they give for not going through the public markets. And one of them is usually around valuations, okay? Usually in the private capital space, there's a lot of opacity. So multiples can be quite high. Now, in the public markets, on the other hand, usually for you to have a successful offer, you need to offer your securities at a discount. So that has always been one of the issues. Now, the other issues are around liquidity. And you know, we need to understand where private capital funds come from when they talk about liquidity. What they say is that they would actually want to exit in phases, okay? So you exit in phases. And by the way, I think if we look at our listing rules, they require that the anchor investor remains locked in for a few years, okay? Now, what that does is that, yes, they'll be locked in, but the question they always raise is that, will there be liquidity for me to exit later on once the lock-in period is over? So we might need to look around that lock-in clause and also try and address matters of liquidity so that we make public markets a lot more attractive for private capital funds to exit. Then incentives. I believe in incentives, and I'm also happy that one of my bosses is here. I think we need to incentivize. We need to incentivize the capital markets. It's imperative that we incentivize capital markets. We need to find ways of attracting participants as a way of driving activity and, you know, creating vibrancy. So just a few thoughts around private markets and public markets. But I know my senior here probably has a lot more to share.
No, I think because of time, I'll just speak about what we see. Maybe the gap between private markets, I want to believe it's clear what private markets will be, although it depends on jurisdictions. The gap will be lesser if public markets can handle disruptions well. As long as we are too careful, I think the private space will move on with most of the innovations we are seeing. Of course, we know alternative investments are more applicable in that space. And I see a bit of regulation because of the risks and also the experiences people have seen in the private markets. But it depends on how we handle disruptions in the public markets.
I like how you state that, how we handle disruptions. And really, Gava, we're concluding. Just as we conclude, really, what two disruptions are you seeing? Really a question to all the panelists. Yes. What two disruptions are you seeing in the capital markets, and what can we prepare for? Just two.
Two of them.
Think about, yeah.
One of them, Kizito spoke to, DeFi, decentralized finance, where we're seeing a lot of use of blockchain. As I speak today, there are people who want to set up digital exchanges. It means the physical exchanges we are used to, perhaps we need to start thinking about them. We are just about to have a very big IPO in Kenya. The users asking, can you allow us to participate using cryptocurrencies? So I think DeFi is going to be a serious one. In my view, again, AI is replacing human interventions in many ways. And therefore, it means where we've had certain services given by people, it's most likely that we will have very smart machines do the same. By the way, there are many. I think if you look at social, cultural, we've seen geopolitical, and it just becomes a mess. Yeah.
Disruptors. Quite interesting. Dixon.
I think I might have nothing much to add. I think same disruptor around automation, technology. But I think if there's one thing that I think we need to look at from a capital markets perspective, and this is something I'm just making up right now, the issue of the geopolitical risk factor. I think that's a factor that is just rearing its ugly head. We've seen a lot of trade policy uncertainty globally. We've seen instability in the Middle East. So the question is, how do you proof the capital markets from geopolitical risk? I mean, in our market, I think previous years, offshore investors accounted for about 80% of the volume of value traded. Right now, they account for about 40%. Okay, so there's been a reversal. Okay, and to a very large extent, it's driven by a lot of geopolitics and yields, etc., etc. But I think geopolitical risk is a real disruptor, and it's important that in whatever we do, from the way we regulate, from the way we pitch ESG as an asset class, we always consider ways of proofing that asset class from the geopolitical risk, which is emanating as a key driver of market volatility, market returns, your ability to attract offshore funds, you name it.
I like how he's spoken about the disruptor and the possible solution on how we can be able to guard against and proof our economies. Daisy, from where you sit, two disruptors.
I think the first disruptor, which is going to be with us for as long as we have financial markets, are the people themselves. The savers, investors, whoever is putting in something in our space. Because every day their needs are evolving. So it means that whatever we're doing has to also evolve equally. And that brings in, of course, regulators matching that energy, not falling back, and also having that enabling environment that allows that for whatever the market comes up with, for whatever our savers, our members, our investors are demanding, you actually can meet it on the regulatory side. And of course, technology, we can't do away with it anywhere at this point, from blockchain, but most importantly, from now on the market side, the digital platforms that are coming in now. What that means is that, one, you have lots of risk also emerging, from fraud to cybersecurity risks, even regulatory risk in itself, because now you have so many of those coming up and you have to make sure that they all fall within the safety bracket that you have provided. Like Dixon, let me offer some solutions. And I think the biggest solution is the collaboration that everyone has been talking about. I see in this room you have investors, you have mediators, you have regulators, you have policymakers. We all have lots of ideas in our different pockets. And I think collaboration comes in very handy to make sure that we are bridging the gap between whatever ideas we have from our different dockets. Yeah, I think I'll leave it at that.
Thank you very much, Daisy. And lastly, Dr. Bob.
I want to say that it took us 11 years to realize that mobile money was important and we had to regulate it. Now, virtual assets have come, blockchain is here. We are still silent, taking our pace, but I believe, like you are saying, disruptors, when you understand the efficiency, the innovation of a disruptor, definitely will come up with regulations. And that's why, people could not believe that you could send money without seeing, and here it's a norm. So we are still imagining about blockchain, virtual assets, I believe that will come and it will be a thing of tomorrow. Thank you.
A round of applause to the panelists for this insightful presentation. From what I hear, the disruptors are there, but I also hear commitment and firm commitment from the regulators and policymakers to ensure that whoever you are, whether you're saving for retirement or whether you're saving for an investment or whether you're an institutional investor, that there's firmness in protection of each of your investments from wherever you're seated. A round of applause again to the regulators. I think it's also a commitment to be agile to the disruptions. Ladies and gentlemen, allow me hand over to Gava. It's been a privilege to serve you on this panel. Thank you very much. I think a photo for, the group photo. Can the
Okay, I think that the problem we have, market development, Mr. Dixon, who supervises the moderator, Terence Tumwine, a senior researcher and market development. Now, for those of you who are aware, we are getting to end of year appraisal. So if you, you are in a big problem because I noticed that Terence was getting all his scores here. We kept saying Terence that time. He said, yeah, a year. And he would come back. Dixon, let me come back to you again. So, he said, how many times are you going to come back to Dixon? And I think that's a problem. And I think going forward, I'll be back in to make sure that I supervise and guide so that people like Terence are not ideal to really, because when you're asking your boss questions, and now to make matters worse, even Ministry of Finance was there. So the whole hierarchy was a challenge. But let's clap for Terence. He has dragged us. Terence, where are you? Okay. Terence, thank you very much. You've extended this conference an additional 20 minutes. I hope you are happy. Moderators, avoid a scenario where we come to you so many times. Yeah. So we are going to be having our tea break, but I'm trying to see the modalities of how we are going to have it. But before we have it, allow me invite Sophie from DFCU to come and make use of the 2 minutes for our sponsors. Please join me in showing her love. For those of you...
Ibrahim, I'll keep my accent local so that you feel comfortable. Sophia Chak is my name. I'm from DFCU. I am the general manager at DFCU Limited, which is the holding company. We have about 2 other entities. That's the bank. We are more familiar with DFCU Bank and the foundation. At DFCU, the way we actually started at inception, we came in as a development finance institution. So we are usually thinking of the long haul, which is development. That's why partnering with capital markets and USC is very essential for us. One of the things that we do at DFCU is that we have, for the longest time, we had ADC, which is Agribusiness Development Center, which was focused on the development, building capacity of the smallholder farmers to ensure that the agri space is actually growing. And now that is our foundation, and we remain very strong there to ensure that we remain. We help the development of this, our major sector of development in Uganda. We've also been, we are a listed entity, and we've been listed for the last quarter a century, 25 years. I know it doesn't sound exciting, but it's a big deal. 25 years, may I repeat? But that said, our intention as DFCU is to drive transformation of individuals and businesses. So in terms of what's happening right now, it's very central to our hearts. What the East African exchanges have done to package the top 20 entities so that we can create an avenue for absorption of capital. We've seen a lot of capital come into our countries and into Africa, but our absorption is the absorption level is very challenging. Now, for us to be able to partner in any way with the capital markets and USC, it would be a big deal for us. So what we can guarantee as DFCU is that we are there. We are here for the long haul with you to ensure that we create a platform that makes Africa or Uganda more investable. So just to say thank you, we'll be here in the long haul with you, not just for Uganda, but also as East Africa as a whole as well. Thank you very much.
Thank you so much, Sophie. As we said at the USE, we really appreciate all the support that has come through from our sponsors to make this event a success. And so that was DFCU. Thank you very much. So a slight change in the program for today, as my colleague Gava has communicated, an important part of the day, which is your tea break, because we want to keep you guys energized, alert, and we don't want your sugar levels to drop because it is Friday, but also because we want you to pay attention. So specifically, we have a very exciting panel that's going to come up. And this panel will discuss a unique topic, which is unlocking agricultural financing through capital markets. And while I call up this panel, we're going to have a working breakfast. So depending on how you feel, we'll request you to pick a cup of coffee, pick a cup of tea, something to bite, as the panel discussions go on. And this is because we are trying to work in the interest of time, but also to give you a chance to have the best of both. So allow me welcome the following people who will be taking us through this very exciting topic. The first person is Miss Maria Mwebaza, who is the Commodities Manager at the USE Commodities Exchange. I know you've heard a lot about that. And Maria is here to tell you all. A round of applause. Maria, you're very welcome. The second person is Mr. Alfred Mwangi. He's the General Manager at Shambabora. Alfred, you're very welcome. Yes. So that's Alfred from Shambabora. We also have, Sophie, I have to call you back, unfortunately, but Miss Sophia Chak, now the General Manager at DFCU Limited. She has already told you all about it. So a round of applause again as Sophie comes back, this time as a panelist on this very unique topic. And lastly, from all the way from Tanzania, we have Mr. Godfrey Malekano, who is the Chief Executive Officer at the Tanzania Mercantile Exchange. I think we need to clap more. He's the only non-Ugandan on the panel. You're welcome, Mr. Godfrey. Right. And on the moderator, we have Mr. Stephen Kaye. Stephen from Venture South Management. Stephen, you're very welcome. A round of applause. Stephen, I have been very reliably informed that you have exactly 30 minutes because it's a working panel, and I know you're going to do very well on that time. So over to you.
Thank you so much. I don't think it's a setup, as said, but they talked about a tea break. Based on the panel I have and what we expect of the panel, we may cut the break short. So allow me to start with telling you about Venture South Management, brief notes. Venture South Management is a collateral manager. We are affiliated to Venture South International, Geneva, who does a lot of funding for SMEs. SMEs in our bracket are termed as the missing link. And why we call them the missing link is because they are underlooked by so many financials in terms of risk. So our head office in Geneva does a lot of funding for that, and Venture South Management within the East African region does a lot of collateral management for those SMEs that are taken to be highly risky and not very favorable in terms of financing. So we are working closely with USE, and we're the collateral managers of the Commodities Exchange. So we've handled about 3 pilots within the country, and they've been very successful. And that informs today's meeting. We're also conducting a number of trainings with the cooperatives and farmers to ensure that the commodities that come for the trading are the expected quality, standard quality commodities. So we do a lot of training in collaboration with the USE, Securities Exchange. I'll end at that because we're given, our time is limited, and I have a very beautiful and balanced panel, as you can see, for today. I have 2 ladies and 2 gentlemen. You're all very welcome. Sophie has already told you who she is and what she does. Maria, I think the bio has been given, and Geoffrey's. I think I'll start with Alfred to kindly tell you who Shamba Bora is and what they do before we can kickstart. Alfred, please.
Thank you, Stephen. Morning to all. Alfred is my name, the Managing Director for Shamba Bora. Shamba Bora is a company located 200 kilometers out of this location, closer to the farming community, basically agro-processors and traders with key focus on food solution and changing the perception of what is agriculture or soft commodity trading in the country and in the region as a way to unlock the potential for the farmer, but also to field ourselves. Thank you.
Very good. I'll not give others a chance because you've seen their bios, and because of time, I want us to start with the most important, what they say, the most key person on the panel, and who will take us to the other panel members basing on what comes out of what he says. So, Alfred Still, briefly explain your role in the value of unlocking agricultural finance through capital markets.
Thanks once again, Stephen, for that question. Shamba Bora sits at the intersect of the farming community, that's the producer, and the other side where we have the market, and of course, most of you have talked about investors. So we are in between there. We are the people who are taking the 2 shocks from the producer, asking us, when can we sell? Why are you giving us low prices? Why are you not paying us now? And at the other part, again, is because of where we are situated. Processing is critical, making sure that we preserve that grain, that food that they do produce, comes in handy. Whereas on the other side, the market is asking for the grain now or at a future date for manufacturing. So there's delay and there's capital that is held within that space. And the investor is looking for opportunity. But how does that come together is a big challenge, and it's what we are here to talk about. So apart from that space, we are able to help farmers monetize their produce by processing for them and storing for them through deposit slips or goods received note, which can then be traded, and that offers an opportunity to an investor. We are accredited by USC COMEX as a warehouse, and that gives the credential for the deposit slips, which an investor can take part on. What are the challenges as you have put through? The perceptions by the traditional banking system of what is agriculture is a key challenge. And that comes in two folds. Fold one, building the infrastructure, where the infrastructure is the brick and mortar, the machinery, but as well as the network of the farmer. The second is the perception that we are lending you money or debt, and we cannot confirm where it's going apart from the very formal markets or industries. So that gives us a challenge. I'll categorize them as three. That's one, the perception. The second one is the timeliness and to which the funding comes in. I might go to convince my sister here, Sophie, from the day one that we planted, and she might give me the money before then or after the harvest and the grain is gone for the next season. So that's another challenge, the timeliness. And the third one is the misalignment of the products that the traditional banks have. You'll more than often hear about contract financing, invoice financing, and only that can only come after you have negotiated with the buyer. So you are negotiating and you're paying, you're committing yourself for a price of a physical that you don't have. In short, you are speculating. So that comes in as a challenge. But bottom line is that we want to convert the farmers' production into a potential investment unit for them to grow in the future. Thanks.
Thank you, Alfred. I am not going to repeat what he has said. I see my audience is very attentive and picking up on everything. I'll straightforward go to DFCU, as Alfred has talked about them in his speech. And to you, Sophie, briefly explain the role of DFCU in the value chain of unlocking agriculture financing through capital markets.
Thank you. Hopefully Alfred does not put me on the spot, but just to elucidate some of the things that we do, one of the key things that, of course, banks naturally are expected to do is to finance, which helps with the growth and the expansion that they're looking for. What we're doing right now as DFCU, and not yet, it's in the process through the exchange, but not yet with the exchange, is the warehouse receipt financing. So that's the trade finance. So we structured some transactions there where we can lend against those receipts from the warehouse to the farmers before even they sell, and then settle at the point of sale. That's something that we're doing right now, which is helping quite a bit, and we're looking to expand beyond that, at least through the exchange. There's already works happening through the commodities exchange. There's already discussions happening, and we believe in the near future we should see that. The other part is the blended finance. We have started, and we have been in that space. We have started a bit of the blended finance, which gives a level of, it de-risks the agriculture space a bit, in the sense that you have commercial funds in the same space, you have concessionary or philanthropic funding, all in the same pool, and therefore reduces the kind of costs that are passed on to the farmers, and makes it easier for banks then, because you have different partners within this pool that is lending to the agricultural space. Thirdly, for DFCU specifically, I think when I was just giving the sponsor remarks, I mentioned that we had as one of our, it was initially, I would call it a subsidiary of the bank specifically. Now it's morphed into our foundation to just widen the scale of what we can do. So the specific function of agriculture development, agribusiness development center, was specifically to deal with the smallholder farmers. As you'll notice, it's not unique to, I don't even think it's unique to Uganda, that financing to the agri space has tended to be slow. Many players have slowed down. They are actually focusing on the aggregators, who are relatively safe. They have structures, they have systems, and that's the key challenge that most financiers experience. The structures, the systems in place, and that's why it's easier for us to actually work with the aggregators. So why we formed the ADC and now Foundation is to just to have a team that goes on the ground to help build capacity among the smallholder farmers, so that they have the records that can be tracked, the data points that can be worked with to develop the appropriate products. A very key point that actually Alfred mentioned, and I think a previous speaker, that are we actually letting out the right products into the market? We've been largely giving what is in formal structures, formal business. So how do we get to develop the right product for the farmers, or right up to the SMEs, is to understand how they work. And that's why the foundation is there. They've been around for 7 years, and they've made quite a huge amount of progress. And we continue to expand beyond the purpose for the foundation, expand beyond agri, but agribusiness remains our core area of focus, to ensure that we can increase the financing all the way from the small farmer all the way to the much bigger entities, the entire value chain. So that's what DFC is doing right now. I think some of the things we are thinking along with the partners, some of our shareholders and the different investors that we deal with, is in partnership, for example, with New Vision. We have the Best Farmer, connecting them through some of our partners to go and visit the countries that have done very well in agribusiness. What are they doing that makes them more more bankable, so that we can apply the same home? Because this is our bedrock. This is a bedrock of our economy. What is being done there that is making them successful, that we can apply this side and grow our agribusiness space? So what's the role of the financiers, DFC in this case? That's what we've really done. Create the financing exposure for our farmers, and then conversations with the commodities exchange to see how we can also get in and expand the scale of the financing that we're giving to the agri space.
Well articulated, Sophie. Thank you. Very interesting communication there. I'll turn to Geoffrey, TMX. After Sophie's presentation, how is the commodity exchange helping farmers, aggregators, access financing more easily, especially those who may not have traditional collateral?
Thank you very much. Good morning, everybody. My name is Godfrey Marikan. I'm the CEO of Tanzania Mercantile Exchange. Basically, apart from Ethiopia Commodity Exchange and SAFEX, we are the leading commodity exchange in Africa. And since we started, we've already traded more than 1.4 million metric tons of commodities, and we have listed more than 10 value chain, including metal. We are trading also gemstone apart from agri-commodities, but also want to increase spices, seaweeds, and other products. And our exchange is an online exchange. It's accessible from everywhere in the world. Provided someone has fulfilled our requirement, he can access from China, India, from wherever he is. And also, We've covered more than 25 regions of Tanzania. Farmers are able to sell it to exporters who are seated in Dar es Salaam while living 1,000 miles away from Dar es Salaam. And we started around 2017, making some preparation for the exchange, drawing the rule book, developing the trading platform. And since 3 years ago, we've managed to trade more than 1.4 million metric tons of commodities worth around 4 trillion Tanzania shilling, which is equivalent to 1.6 billion US dollars. So our exchange is there to connect farmers and buyers so that they can trade commodities while adhering to rules and regulations. And if you take our exchange, farmers now, we have a robust warehouse receipt, and we have a special regulatory board for the warehouse receipt, which is regulating the system and is under the Ministry of Trade. And we have Commodity Exchange, Tanzania Mercantile Exchange, which is under the Ministry of Finance, and we are regulated by the Capital Market and the Securities Authority. And our key aim, as I've said, is to enable effective price discovery of commodities. Nowadays, farmers are able to know that maybe when I will sell my pigeon peas or chickpeas, at least I'll fetch a certain price, because in the market there are buyers who are competing each other, and at the end of the day, you are getting prices. But also, we are talking about transparency. We have increased transparency. For example, after every trade, we disseminate information in a real-time basis through our market display units, but also through social media. Farmers are able to follow development in the market. So unlike in the past where getting information was difficult, nowadays bank can access to such kind of market information, and if they've lent some money to someone, then they can know exactly maybe which price are prevailing in the market. The other thing is we've brought efficiency to the market. Currently, we've lowered the cost of participating. Previously, buyers used to travel south miles so that they can go and buy produce. But now, sitting on your computer, having coffee in your office, or anywhere, even at home, you can access our system and trade. That one has made easier to increase participants to our market. The other aspect also, we've promoted fairness in trade. In the past, when the cooperatives were managing auctions, whatever, in order to buy, then it was very important for you to know someone within the cooperative system so that it can give you a favor or whatever. But now with our system, someone can easily access the market. Even if you come today to Tanzania, you have fulfilled our requirement, you have paid the necessary deposit margin, you have filled our forms. If you are allowed to participate, you can participate like any Tanzania. So that one has increased participants. Nowadays, we are receiving people directly from China, India, Vietnam, Japan, who are coming to Tanzania to participate in our market directly without any obstacle in their participation. But the most important thing also, currently we are working on issues relating to risk management. We want our participants also to hedge adverse movement of price risk, so that at least if a bank has lent to someone some money, then at least they can know that they can hedge those particular instruments, so that at the end of the day, they not suffer losses. We are currently talking to different people, because we know that in order to have an effective future market, we need a very good working central counterpart system, CCP. We are talking to people who are interested to become speculators in the market, because we need to add liquidity to the market. And in order the market to operate smoothly, you need such kind of players. We are working to people who may be interested to become arbitrageurs in the market. But also, we are working with processors, big farmers, so also they can participate if we launch future markets, maybe in 2 to 3 years time. Because currently we are trading only spot contracts, And our aim is to move commodities from farm to the market. And future, we took it as a second priority because we do understand that apart from SAFEX, no any other African countries has managed to establish a well-functioning future market. But for us in Tanzania, we allow spot with some add-in or forward as we move to the futures market. So also, as part of my exchange duty, is to provide liquidity to the market. Farmers, processors can be able to access capital from the market because whatever they have in their warehouses, there's a liquidity for that particular stock. Because if someone, no one is there to buy, the market is not there, so even banks will feel that it's not good to lend because we are not able to know exactly whether whatever we are going to finance will get or will fetch market. Talking about maybe how now this commodity exchange can facilitate access to capital, I think it's high time now for people in this room to think about agriculture investment fund. You can have such kind of fund, can think about agriculture bonds, and also warehouse receive financing. You are welcome. There is an issue of trade finance. I know most of our traders, especially local Tanzanians, do not have enough fund to participate in an export market like Asians and other people are participating. So that one is also an avenue which people in the room can work. Thank you very much.
Thank you, Godfrey. Godfrey has said it all, but in principle, the only way to traditionally finance without collateral is through the warehouse receipts and the warehouse receipt system. That has been well picked up. Thank you so much. According to the African Development Bank, it is predicted that the next millionaire or billionaire will be produced by the agricultural sector. And very interesting, the supporting points to that is growing demand for the food that we produce, the investment opportunities for the big shots in this room, and the innovation that has been talked about by Dennis Kizito from the Capital Market Authority. Allow me to move to our next panelist, Maria, from what has been said by the other panelists. Please, what could be the role in terms of partnerships between banks, Capital Market Authority, Commodity Exchange, playing to facilitate sustainable agricultural financing?
Thank you, Stephen. Maybe before I answer the question, I'll come back home to Uganda and talk about agriculture. About 24 to 26% of agriculture contributes about 24 to 26% to Uganda's GDP. And 42% is the contribution from export earnings. And it also has a 70% contribution to the population employment. However, only about less than 10% is the formal credit that agriculture gets. Now, if there's a partnership between the banks, capital markets, and the commodities exchange, there's an unlocking of sustainable agriculture financing by converting the stored commodities, and this is through the accredited warehouses and facilities, into bankable and tradable assets. Now, if we look at the different players, the banks actually avail working capital to the farmers or the aggregators and traders. And this helps in the process flow. And for the commodities exchange, it actually ensures that there's a formation of the warehouse receipts or the trade receipts, and then securitizes them, makes them tradable, and for the capital markets,
it ensures that there's a long-term, there's availability of long-term investment through instruments that is usable continuously and ensures a flow of finances from the investors to the farmers. So in brief, it actually ensures that the goods or agricultural products and commodities are converted into, they are made valuable and they can be traded in a structured way.
Thank you, Maria. That's been very precise. I wish all the panelists can be like Maria. We'll do the 25 minutes very fast. Maybe to be unfair, I didn't introduce myself, but the panel did introduce themselves, and they're introduced, but I'm the head of operations at Venture South Management. My name is Stephen Kaye, as said. I'll be glad to tell you that one of my directors too is in the room, and I'd like him to wave to many of you to see him. Many of you know him. By name, he's called Christian Beine. Thank you. Coming back to my panelists, I'll go to Sophie, precisely. As said by the research from the EADB project that predicts that the next millionaire or billionaire will be coming from the agriculture sector. The challenges, just two of them that were highlighted. And one of them is access to financing. And the second was infrastructure and policy support. Infrastructure has been talked about by previous panelists, and probably I would like you to concentrate on access to financing. And my question in that regard would be, from the banking perspective, what risks make agricultural lending unattractive? And how can the Capital Market Authority instruments like warehouse receipts, commodity-backed securities, or guarantees help reduce these risks?
Thank you. The financing to the, as mentioned earlier, the financing to the agri space has kind of not risen to the level it should, as it in the case of many other sectors. Mainly, the major factor is that the systems and the structures, most of the agribusinesses, especially on the lower end, do not have records. I think it was mentioned earlier, I'm trying to remember who said it, but also the price fluctuation element. So you lend against expected cash flows from the sales. And if the price dips, it is a high chance that you're not going to get your full funding back. And that is going to affect the performance. Of course, it will be a natural non-performing asset, and the banks have to, at a point in time, if it fails, actually write it off. And if you look at the number of non-performing assets in the banking space, a good proportion comes from the agri space. And really, no records, no systems to cushion. And I appreciate the fact that he's talked about hedging now, creating some kind of platform that helps hedge against some of those risks and fluctuations. So we're still struggling with that in Uganda. I'm very happy that really the commodity exchange is coming up. The banks want some kind of assurance, a party that can help create a level of data points, records that the banks can work with to ensure that the finances that actually go do come back, are paid back. That's a very key aspect. Now, if we also have a regulator in that picture, giving a level of oversight in this space, that creates a stronger level of confidence, not just to the banks locally, but even the different partners who will be coming in, who want to come into the agri space. So the exchange actually coming into this space, I just like the Tanzanian story. They are quite ahead. The futures, we just hear about this thing in the Western market. Now bring it to the African context really is a beautiful thing. Now, why does UDB, you said UDB, right? The next billionaire, say, why do they say?
Africa
Development Bank. Why do they say that the next billionaire is going to come from agriculture? From, especially if I can speak for East Africa, our natural capital is on the land. we can easily grow things, and they grow naturally without much effort. And then again, in East Africa, we don't have many extreme weather patterns like we see in the Western world. So agriculture is a space for us to actually harness and develop naturally without much effort. But where have we struggled? We are very fragmented. The businesses are very fragmented, heavy subsistence. So you find that if a bank is lending, they're lending to 10 different farmers. Out of that 10, likely 7 will default. So you only have 3 coming back. And maybe they even come back with a smaller percentage, 70%, because of not having systems and structures to manage the fluctuations that affect the agriculture space. I know I've spoken a lot, but let me finish. So it's a fragmentation. It is the lack of the systems that make it difficult for financiers to lend into that space. But the hope, as I mentioned, is that you now have the exchange and a regulator coming into play over and above the warehousing space of Alfred's side, that are aggregating and therefore creating a larger pool that we can invest the finance and be sure that it will come back. Yeah.
Thank you, Sophie. I have 6 minutes, and we're going to use that very well. So my panelists, please. I'll move straight to Alfred. Alfred, Sophie has said it, and I want you to confirm it. What are the main current barriers preventing farmers, aggregators, or agribusinesses from accessing affordable and sustainable financing? Thank you.
Thanks, Stephen.
2 minutes, Alfred. Thank you.
So the barriers towards financing is appreciation and tools that come to govern the transactions. Happy to hear, happy to be part of USC COMEX. It offers one of the options. I want to be a testimony that yes, we have been able to receive grain from the farming community. We have been able to put it on the trade platform through USC, and we have been able to trade. So there is a track record. And I'm sure that Sophie now has her data points and is ready to now start quantifying that. So that is a plus. 2, initially there was less companies and processors within the country or within the countryside where the production is much based. So today we are having much more, and there is more light and agreement towards the quality assurances and standards that helps in the trade from one location to the other. So that is another enabler to the financing. But finally, it is the banks or the investors coming to have confidence that that warehouse receipt is something that can be monetized, that can also be converted into digital form as a final goal. Thank you.
Thank you, Alfred. Very good timekeeping. Going back to Geoffrey. Geoffrey, we need to be brief.
Thank you.
Sorry about that. The question is, how do you ensure price discovery and liquidity in your market?
First, we normally carry out effective marketing campaigns. We are speaking to commodities houses in China, in India, Vietnam, so that to ensure most of people who are importing from Tanzania do participate in our market. For example, soon we'll start a cashew trade around the 31st of this month. Already we've talked to commodities house in Vietnam, India, and China, who are a major importer of cashew nut. And we expect more than 80 participants from those countries to come to our market to participate. And through their competition, then effective price discovery can occur, as we did last year when we launched the first trade of cashew, and we had the highest price in the history of cash trading in Tanzania. So we are all set to ensure that effective price discovery is happening in the country. But this one is not an event, it's a process. So we are still working hard to ensure that we'll continue to record the same success we've been recorded over years. Thank you very much.
Wow, well done, Geoffrey. Very good. Please give him a hand clap if you have to. Thank you. Maria, you've had them. Just one. Looking ahead, how can capital markets support the growth and resilience of the commodity exchange and the broader agriculture sector? Thank you. 2 minutes, please.
Thank you, Stephen, once again. The capital markets can actually, one, there could be a mobilization of patient capital, and that's money that stays longer, for a longer period. And then secondly, it could enhance, supporting the enhancement of investor participation in the agricultural sector by ensuring that there are instruments like maybe the commodity EFTs, the REITs, agribusiness, corporate bonds, the green bonds, and all other commodity products. So once they are all enhanced and investors can actually support, can come in and they're interlinked to the farmers, it will ensure that there's not just commodity trading. We don't just trade commodities, but rather we build an ecosystem that ensures that there's a financial flow from the investors to the farmers and in a structured environment.
Very good, impressive. Give a hand clap. I'm left with only one question for my panelists, and that is for Sophie. Sophie, I want you to wrap it up very fast before I get to my audience. How can commercial banks partner with the exchanges and regulators to extend blended financing models that can reach smallholder farmers?
Okay, thank you. The blended finance includes a level of philanthropic funding. So most of the philanthropists, external especially, will naturally want to partner with a reliable entity, one of them being the banks. So we have access to some of those philanthropic funders. What we can do internally before engaging some of these philanthropic funders is, of course, like the partnering with the commodities exchange to guarantee that the funds will actually be used in the first place, not to marry a second wife, Ibrahim, okay, but to actually use it for expansion of the farming or development of the farming, because many of the previous habits in that space have not been the appropriate habits, not used for the actual reason of development of the agribusiness or the farms that they're in. But also, too, together with the regulators, is provide some kind of framework that can help farmers develop long-term businesses that are reliable and will attract, therefore, long-term blended financing. Right now, what is coming into Uganda is I won't say a drop in the ocean, but a tip of the iceberg compared to some of the statistics that we're hearing in the rest of Africa. The partnering between the banks and the regulators and the exchange can help us attract bigger funding, because once we see the established entities and the regulators in that space, there's greater confidence coming in from the philanthropic funders that will help bring in this, de-risk the agriculture space. So the roundtables that are already happening right now. But number two, whether we have roundtables and we have not actually trained, we can't run away from that. We're still in a space where we need to help our farmers. It's interesting, some of the engagements we've had through the through our foundation. You'd be surprised that some of our larger farms don't necessarily have records beyond even 2 years. So a key job for us is to actually train and create a level of confidence in the farmers to put systems that will put records in place, financial records over a period of time, not just 1 year, not just 2 years. There has to be a trend. Now that's a key job for us, the bankers and the regulators and the exchange, to actually put that in place. I believe if we have those two, the statistics that he's speaking about, we'll have it in Uganda as well, quite frankly. So for me, it's exciting that we have an exchange that we can already pick a leaf from. We're not going to pay school fees from scratch. He's already here, we've met, the cards are going to be exchanged, the conversations begin today on how we can actually learn without necessarily having to go to the ground completely. So for me, that's what I think we can do as the banks, exchange, and the regulators.
Well said, Sophie. Very well, very well. We are doing a lot of training with USE and some banks in Uganda for the cooperatives and farmers in that line of assuring that their records, their governance, and they're able to access financing, as said by Sophie.
Sorry, just before you move away from that point, I visited one of the banks that is known as an agriculture bank. One of the interesting things they did in the Western world is that they have an actual farmer. If I may use the word, their work in the bank is like a gig. So he's been employed as part of the executive of the bank. What will that help? This is a farmer who knows how farmers think every day. Now, if they understand the psyche or the thinking process of a banking institution as well, it will help bridge that gap for both parties and help the financing get better. I think it's a tool we can also use on this side to help us work better on the financing piece.
Wow, very innovative, very innovative. Thanks, Sophie. My panelists, the questions are now coming from the audience, not me. The discussions are open to the audience, and I would like to hear from my audience.
Thank you very much. My name is Patrick Mususa. I'm from Tanzania Institute of Bankers. For me, it's just a comment, essentially to thank the panelists. I've learned a lot from them. I was just wondering to propose this just as a thought. As we are thinking about growth in commodities and agricultural finance, it may be worth looking at the value chain, building the capacity of the value chain, and looking at what already works and strengthening that. It may not be mobilizing financing, but rather building capacity. Specifically of cooperative unions, agricultural marketing cooperatives, which are already existing in certain structures within the coffee board, the cereal and other processes, other crops, other produce board. So there are boards within different commodities, for example, in Tanzania, that oversee different commodities, coffee, cereals, other produce, and in some cases now we're going into metals and so forth. I think cooperative unions from agriculture, they are more sort of cooperatives within the farming community. They have a structure, they have buildings, they have offices. They can be able to guide farmers in terms of the grade of the commodities that they're bringing, educate them better in terms of seeding, the seedlings they need to get, or the seeds. And I think banks and capital markets may need to now think outside the box. That it's not about, yes, it's good that we have ecosystem, the financing ecosystem is great, but I think that to the point about financial literacy at the farmer level, I think that can be better supported at the cooperative level, where you have an office, so you have structures, you can put in place some digitized infrastructure to help discover the farmer, their ability to produce grain and commodity, and then based on that, to be able to finance them through the cooperative to start with, and then allow them to seek the information they need to be better and grow bigger and scale up. Thanks very much. Thanks.
Thank you. Can we just have only one to go? Anyone from the audience? Just one? A question to the panelists? Thank you. I think my panelists have been very clear and all topics were well laid out. One of my panelists has something to say. Alfred, please.
Just to add the comment on training, apart from mobilization of funds, is retooling the bank people, the credit people, to appreciate agriculture. As I highlighted earlier, is the perception of the bank needs to be reworked. But also, the fund managers need to be retrained on agricultural investment products so that the fund managers can also come and put in money and buy through the commodity exchange. Number two, taxation. The processing and the storage is a service. So in our community, are the tax bodies exempting or incentivizing that action, that the processing and the storage does not attract VAT for those processes? So that's critical. And finally, from a taxation again, is on the capital gains that could be coming. How do we make sure that we get some subsidy or incentives? Thanks.
Thank you, Alfred. Thank you, my panelists. I think you've heard it all from them. They've broken it down as expected, and I believe they deserve a round of applause. Thank you. Can we have a group photo before we leave?
So thank you very much, the panel on agriculture financing. I don't know if you heard the GM of DFCU saying my name about marrying and using philanthropic money to marry. I'll leave it at that. Sophie, at the cocktail, you and I, we'll have a discussion. Yesterday we said to stand is to sit, and to sit is to, and to clap is to. Can we do that? Can we do that? All right. So we are moving right away. To sit is to, and to stand is to, and to clap is to. All right. Stamp, stamp, sit, stand, sit, stamp, sit. That's okay, let's sit. Yeah. The moment I saw Assistant Commissioner sitting totally, I knew that enough of the game. We can't play anymore. So, Jacinta, let's make sure we don't forget to thank these people that set up the conference, the ETROCA people. They are behind there. We need to thank them. I think they've done a tremendous job. I've fallen in love with the setup and how it looks like. So ETROCA, after lunch, I'll make sure that I appreciate you before I forget. So make sure. Food has a problem sometimes. You can skip the key components. So before we move to inviting our next sponsor, DPF, allow me give STT just 2 minutes to come and share a word. I don't know if the representative of STT is here. Michael? Okay. Can we clap for our sponsor, STT?
Afternoon, everyone. I think most people know about SCT, but I'll just give you a brief history of SCT and how we fit in. So SCT is an acronym for Securities and Trading Technology. We were established in 1985, so we're 40 years old, and we're really a fintech company for the financial market intermediaries. So we supply software for exchanges, central banks, CSDs, CSDPs, clearing members, and literally anyone in the financial markets. So our products cover automated trading systems, central securities depository systems, surveillance systems, real-time risk management systems, as well as custody and broker back office systems. And we've recently added our e-IPO system as well. We also supply systems for central banks, so we have a central bank management system. And at this point, we're a little over 100 staff members, and we work totally remote. So we've got programmers, developers, support running literally across the globe. And we have offices in South Africa and Mauritius. And we're proud to be in association with the East African communities, which is where we started off in Africa, or started off in South Africa and expanded into East Africa and thereon. So thank you very much, and we're happy to be part of this community. Thank you.
For nearly 4 decades, we've been at the forefront of financial market innovation, delivering software solutions that power exchanges, depositories, and market participants across Africa, Asia, South America, the Caribbean, and Europe. Our mission is simple: to be leaders in financial market solutions. And our vision? To revolutionize financial markets. Today, STT supports over 50 active clients, including stock exchanges, CSDs, reserve banks, commercial banks, clearing houses, trading firms, and brokers. From our exchange solution, which delivers a complete trading and clearing solution, to Fortress CSD, providing secure and automated securities settlement, and Fortress Custody, empowering banks and custodians with seamless post-trade processing. We also offer Clarity Surveillance, our real-time compliance and market monitoring tool, trusted by exchanges and brokers across the continent. At STT, we believe every market is unique, and that's why we tailor each solution to fit our client's environment, ensuring scalability, flexibility, and long-term value. We're excited to be part of this year's conference, and we look forward to connecting, collaborating, and building the future of financial markets together.
Buying and selling your shares is simpler with you.
Okay. Thank you very much. Our next part of the program is our sponsor, DPF, but I think it would be ideal for us to run the video first, and then I will get into the modalities of introducing the representative of DPF.
It's our mission to secure your money.
Protecting your money is as important as earning it. It is for this reason that the Deposit Protection Fund of Uganda, DPF, was established by the government of Uganda to provide deposit protection to customers of regulated financial institutions. In the unlikely event that your commercial bank, credit institution, or microfinance deposit-taking institution fails, the DPF will pay you up to 10 million Uganda shillings. Keep your personal information such as national identification number, mobile phone, or an alternative bank account updated with your banker. Terms and conditions apply. For more information, contact DPF at Aha Towers, Plot 7 Lodel Road, Kampala. Call 0312-206-400 or visit our website at www.dpf.or.ug.
All right. Our speaker and our sponsor holds a doctorate in business administration from Heriot-Watt University. She also holds a master's degree in business administration with a distinction still from Heriot-Watt. She is a fellow of the Association of Chartered Certified Accountants, UK, a member of the Institute of Certified Public Accountants of Uganda. She is the first female chairperson of the Africa Regional Committee of the International Association of Deposit Insurers. She is the first African to serve as the chairperson of the Internal Controls Committee, and she is the pioneer chief executive officer of Deposit Protection Fund of Uganda. Join me in welcoming Dr. Julia Claire Olima Oyet.
Okay, thank you very much, our MC, and thank you to Josephine for inviting us to say a few words about the DPF, and welcome to all of you, our brothers and sisters from East Africa. I hope that you're enjoying Uganda, and I'm happy that we were able to meet here. And as you deliberate, I'm sure you'll also explore the tourism in Uganda, because each of us as Ugandans has a duty to support the tenfold strategic drive that we have. So when I came in, I heard people talking about how they've been tricked. So I also think I've been tricked this morning or this afternoon, because I was going to present, but now the video has already run. So I don't know exactly what addition I will make, but I'll do my best. So who's controlling the slides? I could go to the second slide. So the second slide is about the origin. Okay, then this is, okay. Okay, thank you. So the origin about the deposit protection. So deposit protection started in the 1930s in the US, and this was prompted by the Great Depression, where we saw banks closing almost night and day. So the regime at that time decided that there had to be a way to get people to put money back into the banks, because by this point in time, most of the depositors had withdrawn their money, and now they were keeping this money in what we would call secret places. So then, many years later, Uganda also adopts this mechanism, and then it gives birth to the Deposit Protection Fund of Uganda. So in 2016, the government of Uganda took a decision to create the Deposit Protection Fund, and in 2017, we started the operationalization process. And as has been indicated to you, I was part of the team that started the process of putting in place this organization as a separate entity. Initially, it resided in Bank of Uganda, but as a desk. But now we're a fully fledged organization. So as in the video, we cover up to 10 million, but I'm happy that we're in the process of revising this. And I know that many of us will say, but 10 million is too little. I'm happy to say that at the 10 million, we're covering 99% of the depositors in this country. So in terms of a deposit insurer, our deposit insurance is adequate, but we think we can do a little bit better. And the question is always asked, if you only insure 10 million, what happens to my money above the 10 million in that unlikely event that my bank is closed? Well, you will wait for the liquidator, and depending on the recoveries the liquidator will make, you will be paid your money. Okay, so how does the Deposit Protection Fund contribute to the topic of discussion, which is about enhancing our financial sector and making Ugandans or East Africans richer than they were before? So our major drive is in public awareness, and as I reach this point, I would like to say I didn't come alone. I came with our director, Communications, Mr. Patrick Izaga. He's standing right there. And also I have a team, Esther, who's taking the pictures. So for us at the fund, public awareness is like our bread and butter. As you can hear, he's a director. He reports straight to the board, of course, through the CEO. And he has a budget that's supposed to help him reach the public. And the public that we have to reach are the small depositors mainly, but also the bigger depositors, like most of you probably in the room who might have more than the 10 million shillings. So when we conduct this public awareness, we're able to indicate to the public that if you put your money in a bank like DFCU, I saw Sophie's here, DFCU, Bank of Baroda, and anything happened to that bank, God forbid, you will not go away empty-handed. At least you'll get the 10 million shillings. That is comforting to many of the people we speak to. Now, talking is good, but we have to have action. So if a bank is closed, we must be able to pay very fast. And I'm happy that it was not a good thing that last year we had 2 banks closing, but I was happy that we were able to start paying those depositors within an average period of 6 days, which was much faster than what the law allows us. The law says we should start paying within 90 days, but we beat that thanks to technology and thanks to the hard work of the team, our board, and also the contributing institutions, the banks that are always working together with us. And so, of course, this creates confidence amongst the larger population, and therefore you find those who are keeping money in secret places, in pots and maybe pillows, under the beds, wherever, tend to now come and put their money in the bank. When the bank receives that money, of course, it has a lot of uses for that money. That's the same money which drives credit. And we have been talking about farmers accessing credit. Everybody needs credit. So this becomes a very important pool of resources for us to drive economic transformation of our economies. Okay, so I just thought of what I could share with the audience, and I know that all of us are looking towards improving our livelihood, and financial inclusion has been proven to change the status of the people who benefit from it. A small saver puts in their money, keeps saving, then later they can access credit. And if it's a small business, that expands. And you find that at the end of the day, financial inclusion touches lives and transforms lives of the individuals. And so there are many actions for us to think about. Of course, policymakers, we have our assistant commissioner here at the Ministry of Finance, is to ensure that wherever these investments, wherever Ugandans are putting money, especially when they're putting money in a formally licensed and regulated institution, we must have protection for them. I'm happy DPF has that protection, and I'm sure that if there are other government agencies here that have not yet put in this protection, I know that a lot of them are looking at that. For regulators really need to come in to provide consumer protection, mainly to avoid the risks of the public being exploited by the various players in the sector. That is crucial. And for the general financial sector players, especially my friends, the banks, the financial institutions, there are certain things which we need to address. The first one, high charges, and I will go in to explain more about this. High charges, bank charges for banks, and maybe for the rest of us who are providing services. Loss of nominal value, where someone invests with you, and at the end of the day, what they're getting is lower than what they could have gotten elsewhere. Trust, of course, is very important. Privacy is critical, and then how we manage the consumer. So I just thought I would share a few facts with you. I did some research on financial inclusion, and I thought that this is a good audience to share something about the factors that affect financial inclusion. And because I did commercial banking, I looked at factors which are affecting access to commercial banking services, usage of commercial banking services, and the quality of banking services that the customers get. This was for banks, but I know it applies to everybody in this room. So one of the key facts is that my study indicated that people who feel that the bank charges are high, you can see the expression on that gentleman's face, they're really very unhappy. And this affects their ability to continue banking, and they are twice as likely to be unhappy with your banking services compared to someone who feels that the banking charges are reasonable. Okay, the second fact is that people who feel their money maintains more value when kept in secret places or in stock are 6 times more likely to be inactive bank account users compared to those who feel their money is kept in a bank and it's gaining value. And this relates mainly to the charges which reduce the money, and also the deposit rate or the interest rate that the depositors. So the depositors I spoke to would say, I'd rather keep my money in my shop in a safe, because when I take it to, with due respect, DFCU Bank, they will start removing charges, and then even the interest that they give me is not commensurate to what I would get if I put my money in stock and sell later. Of course, this has a lot of implications. The third fact is rotates around privacy. And we see that people who felt that their privacy is going to be compromised were 7 times more likely to be dissatisfied with the services provided. And this later affected their usage. So if I have 100 million, I'll only put 10 million because I'm not happy with the services. Ultimately, they start withdrawing from the sector, and dormancy results. And many of us know that we have a number of dormant accounts in our sector. So the fourth fact is about trust, and that a person who trusts the banking sector is 4 times more likely to open up a bank account compared to the person who does not trust the banking sector. And here the depositors talked about not knowing what would happen if the bank closed. And I think here the DPF picked a message, and we said we're going to run with this message across the country, because they were all saying, now if my bank closes, what will happen to me? And we had to explain that you would get up to the 10 million and we would pay the rest. The liquidator would pay the rest. That is information that was not known to them. So public awareness then still becomes very important. And then finally is a soft issue about how complaints are managed. So the depositors were saying that the statistics showed, or the model showed, that the people whose complaints were not well managed were 3 times more likely not to be satisfied with the quality of services than those whose complaints were managed, ultimately leading to usage issues, dormancy, and so on. So before I come to the take-home messages, I think the message is very clear for all of us as we're looking at designing lots of new technologies which are good, improving on warehousing, which is good. There are also human issues, especially the last point. The population is becoming now mentally sensitive. You'll always hear mental health. It applies also to your customers. So also consider the mental health of your customer, because if that is not done, they look for other alternatives. One, they can sieve the money and keep it in their boxes, in their safes, or they can choose other mechanisms of saving which might not be as safe as the one that you are giving. Okay, so as I conclude, I hope I've not taken too long. I had, 20 minutes? Yeah, so I'm just concluding with take-home messages for all of you just now about the DPF, is that generally, if you have customer complaints about how your bank is treating you or charges you don't understand, as long as that bank is open, it is the work of, first of all, the commercial bank, DFCU, Baroda, and so on. But if it is not resolved, you have the liberty to approach the Bank of Uganda, and I'm happy that we have our board member of the Bank of Uganda, Josephine, here. So the Bank of Uganda has a customer services desk that has been put in place to help the depositors. Only that I must say that when I was conducting the study, none of the depositors tended to know about the existence of that facility for them to be able to escalate their issues. Ultimately, those have the effects that I have mentioned. Of course, updating your information, the video already mentioned that. You'll keep getting messages from your bankers asking you, come to our branch, update your information, bring your name. All this information helps us to execute our mandate of paying you very fast in that unlikely event your bank is closed. And that is how we're able to start paying depositors very fast, because we're able to verify. We used mobile money, we used their alternative bank accounts. And so if a bank was to be closed, you don't have to as people say. You just wait, you'll get instructions on your phone, go to your bank, or get the money in an alternative bank account that you gave to your bankers. So also we're appealing to all of you who might have friends, relatives who had deposits in the 2 banks that were closed. Please reach out to them. The Deposit Protection Fund is still open. We shall keep paying those depositors up to a period of 10 years. So anyone you meet who indicates that they were a depositor in those 2 institutions, please let them get in touch with us. Fourthly is know your bank. You know the bankers will always ask you for a lot of information because they'll say KYC, KYC. Know your customer. The time has come for us also to know our banks. Don't just put your money in any financial institution. You are the ones who are more informed. And like I had maybe not emphasized, that deposit protection is mainly to protect the masses, the small, uninformed depositors. So if you know you have above 10 million, find a way of getting information from credible sources. The Bank of Uganda makes sure that the banks publish their financials every year. So when you see the financials of your bank, don't put it away saying that after all it's regulated. The regulators don't stop banks from closing, but they try to help the bank to remain open. But at a certain point, they might have no other way out but to close. So it's your responsibility to know your bank from credible sources. Of course, avoiding bank runs is very important because of the way banks operate. Sophie and all of us know that if we all went to DFCU Bank and demanded for our deposits, they don't have that money. Why? Because they've lent out money trying to support the economy in different ways, supporting agriculture and so on. So if we all panicked because we heard this rumor about this bank, we can collapse a very good bank. And it's the reason why whenever such situations happen, you see the Bank of Uganda coming out clearly to calm down the public and let the public know that all is well. But for you who have the information, just try to avoid rumors and do not panic. The last one there was the simple one that if you have a loan with your commercial bank and your bank was closed, we would offset that loan while we are paying you out your deposits. So I see someone is laughing. I don't know whether it's about the loans, but anyway. So these are the facts about the Deposit Protection Fund. So send the message. You're now our brand ambassadors. Share this message with your relatives, with your friends, so that they also take responsibility as they conduct their banking on a daily basis. I thank you very much for listening to me.
Another round of applause for Julia. Thank you so much. And now you have heard Julia say that just in case the bank that you're banking with closes down, you don't have to. So what does that mean? That you're safe, and that's what Deposit Protection Fund is. And so I hope you've picked that knowledge. Thank you so much, Julia, especially on sharing the myths and debunking all those gray areas. I thought that was a very insightful part of your presentation, so thank you so much. We mentioned that DPF are proud sponsors, and so on top of that, they've also shared this great knowledge with you. And I'm really excited that we've come to this part of the day. Okay, so we have a brief presentation from our sponsors, Bank of Uganda. I thought we'd clap, but yes, Bank of Uganda. Yes, Bank of Uganda has partnered with us in bringing this conference together. And this presentation will be made by Mr. Arnold. Let me try again. Mr. Arnold Babugwaje. Arnold, are you in the room? Yeah, all right. Arnold, you're very welcome. Arnold is the Deputy Director, Financial Markets Development, and also representing the Bank of Uganda, who are a key stakeholder in the markets that we operate in. You're welcome, Arnold.
Thank you very much. I didn't get your name. What? Jacinta. Okay, I saw someone thinking Jacinta. I don't even know that I was going to speak as a sponsor. I thought I would speak as a central bank. You know, whenever a central bank is in the room, they always give them opportunity to speak as very important guests. So my name is Arnold Baguvwaje. I also happen to sit on the board of Capital Markets Authority. So someone called me and said they'd like me to speak. I thought I was speaking as a CMA board member, but unfortunately I have to limit my speech to BOU. So sometimes we have to criticize other stakeholders, so out positively towards the CMA. Josephine, please forgive me. I know you can catch me on the other side as a board member, BOU, but now I'm going to speak as BOU, and I'm going to speak as frankly as possible. First of all, I'd like to appreciate CMA and the USE for this conference. This is a fantastic opportunity. I walked in and the room was full. Outside is even fuller, you know, so I think the eats that you put outside may be a bit more attractive than the conversation in the room. But it's called social networking, which is, I believe, how we make money. So anyhow, I also don't know where you got that MC from, the other guy. You know, you have Jacinta, then you have the other guy. I'm not sure how much you're paying him, but he's doing an interesting job. Anyway, yeah, you can clap for him. So anyway, I want to make a few remarks on behalf of the bank, and maybe, you know, to appraise you on how important the capital markets are, and what the role is in terms of the function of the bank, macroeconomic stability, the things that I feel or that we feel are not going as well as should be going, and where we need to partner and to improve. And I'll conclude. I'm not going to take too long. 20 minutes are too many. Maybe I'll take 10 minutes or 5. So first of all, capital markets are very important to the central bank meeting its mandate of macroeconomic stability, monetary policy stability, among others. So we implement our monetary policy through the markets. And as a result, we need deep, liquid markets for us to be able to successfully perform on our mandate. I believe we've made significant strides, but I honestly feel like there's much more that we can do. And if I was going to give us a rating from 0 to 10, I'm not sure that we would go beyond 5. So we need to pull up our socks. And I'm saying this as a member of the CMA board as well. There's much more that we can do. And I believe the fact that we're here together discussing this openly means that we're moving in the right direction. So I've talked about monetary policy. Monetary policy works best when you have deep and liquid financial markets, right? Now, if we look at some of the indicators, if we look at things like interest rates, inflation, among others, I think we're doing relatively well as a country. You know, you can see the Africa Financial Market Index was released yesterday, and we are number 3 in Africa. I'm not sure whether we should celebrate that, but maybe all African countries are not doing as well. Relatively, we can clap for that, but you know, there's someone who said that when you're a tall dwarf among other dwarfs, you know, you're all dwarfs. You shouldn't chest thump because of that. Anyhow, when you look into the index and you dig deeper into the particular pillars, you know, things like pension sector reforms, we're doing very badly, and we need to pull up our socks. And yet that is a critical area that will develop the capital markets, domestic savings. If we are not being able to mobilize domestic savings to go into the real sector, then what are we doing? Okay, it's a good thing for us to have macroeconomic stability, to have a stable exchange rate, to have low inflation, which is a bedrock really, but we need to move on to the next level. You know, we need to leverage the capital markets to be able to mobilize financing for the economy, for the tenfold growth. I have my colleagues here from the Ministry of Finance who have set this very ambitious plan, okay? But I'm not sure that the voice of the capital markets is as strong in the tenfold growth agenda. And this pushes us as the capital markets community to be more visible, to be a bit louder. The commercial banks are doing very well on that side, because they seem to be the default. Whenever everyone wants money, they go to the commercial banks. Who is coming to the capital markets? And whose fault is it that we're not speaking up? I believe it's our fault. Let's be very honest with each other. Anyhow, so what are we doing about it, right? As the central bank, we're not working alone. We're working very closely with our colleagues at the Capital Markets Authority, at the Ministry of Finance, among others. And we're unleashing products. Some of them are a bit slow, but I believe there's traction. One of the things that we're doing is on the retail side. There's a project called Okusevinga. I'm sure you've probably heard about it. The ability to use your mobile phone and mobile money to invest in government securities. We are about to launch it. We're just, I'm sure within the next couple of months, before Christmas, we will have launched this product. And this is leveraging off Emma Kiba. I see my friend from the NSC over there. We've seen all the mistakes you made. You know, these are some of the benefits of coming a bit late. So we're not going to fall in the same pit as our colleagues did. But please prepare yourselves. Mobile money is a revolution in the region, and we're going to leverage that to mobilize resources. Now, we have the pensioners in the room, we have capital markets. This Okusevinga platform is going to be a platform that can mobilize all resources in mass. What do I mean? Voluntary pensions. Just imagine any retail saving. You can leverage this product called Okusevinga, but this is on the part of government. I know there's a number of other products that are in the room, but please, let's work together and see how we can leverage off the same platform. We've had different people approaching us and saying, look, you're working with MTN and Airtel, but how about other fintechs? Please come to us. Our doors are open. We want to work together. Instead of dividing and everyone having a piece all over the place, we can have one centralized platform where an investor has an alternative, an option to use to go into government securities or to go into the different asset classes. All these conversations are up for discussion, and I can say that authoritatively. So there's other things that we're doing. You know, for us to be able to develop the longer end of the curve, we need very liquid money markets. So we have worked on that. We've signed the Global Master Purchase Agreement. We have signed the ISDA, which is the International Swaps and Derivatives Agreement. And you know, when you have a very liquid short end of the curve, then there's more confidence and the ability to increase liquidity or enhance liquidity on the longer end. I've been seeing a number of asset managers opening up in the recent past. I think ABSA launched its, there was something that ABSA did. I think it was, sorry? Yeah, their custody business about a week or two ago. I am seeing some applications coming in for similar licenses. Cornerstone did the same a couple of months ago, probably about a year. And you know, as a result, it looks like there's increased participation, which is a good thing, and means that there's more money that is coming around. But the question then is, where are the products to take up this money? Because we see a lot of this money coming into the single product of government securities, right? So whose responsibility is it to develop a product? It is our responsibility. Okay, if you need support from government, please come to government. You know, Capital Markets Authority is government, BOU is government, Ministry of Finance is here. And our doors are open. We want to work together. That's what we're saying. You know, the conventional way of raising money is not working anymore. It will never take us to the tenfold growth that we're looking for, right? If you're continuing to tax people, you will tax them until they collapse, until the businesses collapse. Okay, you cannot continue borrowing government security, issuing government securities, the same product. Where are the markets? Where aren't corporates issuing bonds? Why don't we have municipal bonds? Why don't we have companies coming to issue, to raise money through the stock exchanges? We need to have these conversations. So that's why I appreciate this forum, because, you know, this is where these decisions are made. And I actually pray that, you know, we can project our voices much louder so that whoever is in charge can listen a little bit more. That there are solutions, there are places where you can raise capital. You don't have to rely on the same old conventional sources of capital. Someone talked about segregation and versus consolidation. I think it was Dennis. I don't know whether it was Dennis or someone else. Talked about 39 stock exchanges in 28 African countries. As I mentioned, that, you know, I'm going to raise these questions. We need to ask ourselves questions. Should we consolidate, or should we continue opening up, you know, different exchanges, different CSDs? I'll give you an example of Uganda. So we have 2 exchanges in Uganda, and we have 3 CSDs, okay? Now, we've been trying to link to the Uganda Securities Exchange for the last, I don't know, probably 10 years. And, you know, every time that we're about to succeed, then one of the parties enhances their system, increases the security features, etc., and says, now we've enhanced our system, can you please match up? So when the other guys match up, then when the time comes to integrate, the two cannot talk to each other because one vendor is a Russian vendor, another one is a South African vendor. Man, it's quite painful, you know, to some of us who have been in this space for a long time and who are looking at the bigger picture, okay? So the question then is, should everyone have an exchange, a CSD? Can't we have a common platform? I've been a member of the East African Capital Markets Infrastructure Technical Working Group since 2015. We've had many meetings. I have colleagues, Robert is over there. I have Mr. Nyalali behind there. We've enjoyed a lot of per diem in travels here and there, workshops. But at the end of the day, there's nothing, you know, and as a responsible, patriotic East African, it's a bit embarrassing even to receive an invitation for a capital market infrastructure workshop. So what are we going to talk about? You know, nothing. And we have to have honest conversations, because some of our partners, you know, when we almost got to a certain point, towards the end, they pulled out because of various issues, probably ego, etc. You know, I'd like to appreciate this gentleman who has just walked in, Celestine, C-O-R-S-E. He's the guy behind the capital market infrastructure, that guy. But he's a very hopeful guy. He has a lot of hope that it's going to work. I don't know whether you'll give him an opportunity to explain it to us. But Celestine, what we're saying is that the whole discussion around integration ends up at lip service. We have not done much, to be very, very honest with you. On the payment side, maybe we've done something, but we need to do much more. We've seen some countries like Ghana make progress. You know, Ghana has one CSD, and yet they had two before. They had one at the exchange and one at the central bank. And again, I'm not sure how controversial I'm going to be if I say that the central bank should also consider merging with exchanges so that we have one solid infrastructure. Because I believe, yeah, I mean, if we're one market, then why not? You know, as opposed to having many different pieces all over the place. But I'd like to conclude. I don't want to take up too much of your time. So, times have changed, okay? If you look at where we've come from, I believe in modern history, the first crisis, financial crisis, was the Great Depression in the 1920s. That was a long time ago. Thereafter, the next crisis we had was in the 70s, which was the oil crisis. And that was 50 years later, right? Then we had the Asian financial crisis in the mid-90s, which was 20 years later, okay? We have come from 50-year gap to a 20-year gap. Then we had 2008 global financial crisis, which was 10 years after the Asian financial crisis, right? Then in 2010, we had the Eurozone crisis, which was 2 years after the global financial crisis. 2015, we had Brexit. 2019, we had COVID. Then 2022, I believe, we had the Russia-Ukraine war. Shortly after that, we had the West Asia crisis, and now we have Donald Trump. So the PSST once said that crises, financial crises, are like a taxi stage. You know, when one taxi comes and goes, another one is coming immediately after. So we don't know when the next crisis is coming up. Now, what do I mean? That it was relatively easier in the past to raise capital. We even suffered from HIPC relief in the mid-90s. Highly indebted poor countries, they forgave our debt. But as soon as they forgave our debt, we continued borrowing because now we had more borrowing space. Fantastic. And interest rates rose, okay? So shortly after that, we had the Twin Towers were hit. As a result of that, US cut interest rates almost to zero, right? And the African countries said, fantastic, this is more space for us to borrow. They continued borrowing, okay? And the markets were open, everything was good, but, you know, it began tightening a little bit because the Americans now started looking, internally. He said, listen, we have to rebuild our economies. Now, shortly after that, the global financial crisis hits, 2008, right? So the usual response to the crisis is lowering interest rates because they are trying to lower interest rates to boost their economies, but the Africans are saying this is an opportunity for us to borrow more, okay? And you see the funders over there, because interest rates were very low, wanted to take advantage they wanted to get a better return on their investment, and therefore they all came to Africa dangling this thing called Eurobonds. Between 2008 and 2010, I remember attending about 4 meetings with different leader rangers, you know, trying to convince us to issue a Eurobond. Many of us in the region fell for the bait and issued Eurobonds, imagining that interest rates would remain low. Guess what happened? Interest rates stayed rising. And as a result, many of us said defaulting. You know, Zambia defaulted, Ghana defaulted, Ethiopia defaulted. Some of us in the region dodged the bullet and pushed the ball down the line. But the question is, how do we find ourselves in this position and yet we have something called capital markets? Why are we going to borrow externally and yet we've not mobilized domestic savings or leveraged the domestic savings that we have? Capital markets are bigger than banking in the more developed worlds, but what are we doing over here? Capital markets to GDP is still very low. These are questions we need to ask ourselves. Short of that, if you don't develop your markets, you're going to fall for that bait, issue Eurobonds or go for the expensive debt that you cannot afford to pay back and default. And before you know it, you're captive to those creditors. So it is my appeal that we need to wake up, we need to get out of our comfort zones and develop our capital markets. And this is an honest conversation. Central Bank, Ministry of Finance, all policymakers in the room, we need to partner with the capital markets players and say what is the problem. Okay, let us not come in and say that, look here, you must comply with 1, 2, 3 things, the legal framework, whatever the case may be. If it is a constraint, let's amend it. That's the truth. You know, because honestly, as countries in Africa that are looking to grow and are looking to win ourselves off foreign capital or the expensive money, we need to develop our capital markets. But lastly, as I conclude, right, I'm always saying that there's no better time than now. You know, many times there's a question of who has done it before. Every time you come up with a new idea, where has it been done before? Those kind of things. And yet there are new ideas that have been nurtured or have been developed in Africa. Mobile money started in Kenya, congratulations. Mobile money started in Kenya and there's no one who asked them where has it been done before. Okay, so it is time for us to be as innovative as we can. No one should tell you that because, you know, maybe you're rated, whatever the case may be, or so on, there's no such product that has been issued in Europe or in US, therefore you cannot do it. I believe that capital markets are a dynamic space. They're always changing. And as long as we find a gap and we can plug it with a local solution, let's do it. Okay, and on that note, I'd like to thank you all for participating in this workshop. Central Bank is always going to be available to support as much as possible. We're looking for partnerships with everyone and say, listen, can we work together? Because we all are shooting the same goal. We all want deeper markets. It works for all of us in terms of our monetary policy and our ability to raise capital for our growth agenda. So thank you very much for the opportunity, and I wish you a good rest of the workshop. Thank you.
Thank you so much, Mr. Babu Gwaje. I think very, very, very insightful remarks there, especially on leveraging technology. He has told you about Okusevinga. I hope you are all paying attention. And also the key role in partnerships and how the capital markets can support to increase GDP, but overall regional integration. Thank you so much. Right, we are almost to the close of our program today. Almost there. We have 2 main items on the program today. We have a panel which will be coming up, and then a presentation. So we're almost there. But for now, we're going to take a breather of 2 minutes to have some entertainment from the Nyoni Cultural Troupe. We kindly invite you. We're giving you 3 minutes or 5 minutes just to allow us to refresh our minds as the next panel prepares themselves for the discussion. Thank you.
Somebody yakoze cyane kamba. First call for me that team lead. Some dances need a certain type of a head. Some of you have given you the privilege to touch your head to see if you can actually dance some of these strokes. Because when I look at some of you here, that type of dance you can't. So where is your team leader? He has taken off. Do we have some Rwandese here? I feel like that's a dance that comes from Kigali. Is that true? Huh? It comes from Kigali? Who can help us understand what that dance is all about? I feel like at some point I have more people who grew up from the UK, but now they are Rwandese. Because how come, Madam, how are you? You can explain to us what you just danced?
Good afternoon, everyone. I'm called Maria Monica, and what you have just seen here, that's called a Chinyarwanda dance. It is coming from Rwanda. So the reason why they were doing their hands, why their hands were so soft, it's because Rwandese are very soft. That's that's why their hands were moving like this, the girls' hands, yeah? They are very soft. So that's their dance. Thank you for watching.
I think let's stop the explanation from there. Jacinta, you go. Sorry, you people, I thought that, I don't know where the conversation will end.
All right. Very big thank you to Nyonyi Culture Troupe. I believe we're now refreshed. And as I call up the panel, this panel is going to discuss a key topic, digital transformation in brokerage and fund management. I hope the panelists are all in the room. A very interesting panel. I will start off with a good friend of mine, Mr. Robert Baldwin, who is the CEO of Crested Capital. A round of applause for Robert as he comes in. He needs no introduction. He's Ugandan and American. And we also want to welcome from formerly Old Mutual Investment Group, which is now Old Mutual, Mr. Godfrey Bukomeko, who is the investment and financial advisor. You're very welcome, Godfrey. Let's give him a round of applause as he comes up. Robert, I think you can take your seat. Yeah. All right. The next speaker is Mr. Dan Tumuramye, who is the General Manager, Chipa Technologies, Uganda. A round of applause. You're welcome, Dan. Dan is also a board member to the USE Board of Directors. So very nice to see you again, Dan, and you're very welcome. Our next panelist is Ms. Linda Ratangabo, who is the Investment Operations Manager at Cornerstone Asset Managers. For those of you who are in the room earlier this morning, you met Linda already, so a round of applause as she comes up to the stage. You're welcome, Linda. And lastly, from SBG Securities, we have Ms. Salma Nachiboneka, who is the investment manager. I think I saw her there. Yep, Salma, you're very welcome. A round of applause. You're welcome, Salma. So this is your panel of 5 who will be discussing the topic, digital transformation in brokerage and fund management. And to take us through this discussion, their moderator will be Mr. Arthur William Juko. A round of applause as Arthur makes his way here. Arthur, you're very welcome. We are so ready for your English, and I know you're going to do a great job. Yeah, let's give them one final round of applause just to give them the great mood. Thank you. Oh yes, 30 minutes, please.
Good afternoon, ladies and gentlemen. I think I stand on the already existing protocol. I will begin this panel discussion with a quote from George Westman. The digital transformation is not about technology. It's about reshaping how we create value, connect with people, build trust in a faster and more smarter world. So today's discussion will really be centered around the theme of digital transformation in brokerage and fund management in the East African markets. For quite a number of members, I think I see quite a number of members, specifically brokers and fund managers, sorry. You're very well cognizant with the facts in terms of how we've been dealing with our clients. Our clients walk in, complete massive amounts of paperwork and queue in our offices, and that creates in itself a lack of digital transformation. That shift today captures what digital transformation means for our market. It's not only about automation, it's about simply access, transparency, and inclusion. For we to be able to make sure that our investors connect much more deeper than they are. Our discussion today builds on that journey. How digital tools are reshaping the markets we're operating in, the risks they're posing, and how together as a collective can be able to navigate those risks for a more connected market, inclusive and driving a resilient market. I'll quickly dive into the order of the business. I will quickly start with Linda. I think we call her the new lady on the block with Cornerstone. Thank you very much for joining. We love the competition, but I would like also to hear from you that in your own perspective, how are fund managers leveraging digital tools to enhance efficiency and transparency? Thank you.
Thank you so much, Arthur. Good afternoon. So as fund managers, we are in a very interesting time. Right now, we have so many tools that are at our disposal. And it's really exciting because, let's say 15 years ago when unit trusts were beginning, most of these were not available. So to see that right now we have tools that can enable us, like mobile applications, web portals that can enable us onboard clients without them having to come to the office. We are seeing much faster sign-ups from across the country. And once you make it easy for clients to be able to interact with you online, it changes how they're investing. And it's very, very exciting. Some of the tools include the mobile apps, and clients can now log on, view their statements real time. They can make mobile money deposits. Mobile money has really transformed investment, because right now a client can make an investment at any time of the day, and they can also track their interest. We've seen a number of clients making multiple deposits either throughout the day or some on a daily basis, because they are seeing real-time value that once I deposit, let's say 100,000 shillings, I can see the interest that I'm earning on a daily basis. And also with these tools, you're also able to make payments in terms of redemptions very easy, and this has really fostered a lot of growth in the unit trust space, because clients know that it's easy for me to deposit, it's easy for me to withdraw. So we see a number of businesses as well putting money on a daily basis, saving money and investing for their businesses, and because they know that once they have an operational need, they can withdraw that money, maybe pay salaries at the end of the month. So we've seen a lot of growth, and we've seen a lot of interaction on our web portal, because clients are interested in knowing that, okay, today I've earned this much interest. Tomorrow, let me save more. So it's quite interesting. We are also looking at, when it comes to compliance, digital tools. We now have online AML screening and ID verification. These tools are widely available now, and this has made it easy for us to be compliant with the regulator, and also to reduce risk and manual intervention and verification as clients are signing up. So that reduces our operation costs. We also are utilizing communication channels and communication tools to be able to keep interacting with our clients. Right now, the way clients are communicating is very different. We have young people who are communicating largely through WhatsApp. Calls are no longer a thing. We see people who are communicating through Snapchat, the Gen Zs, and we have to also evolve and be able to utilize these channels to reach our audience. We've seen a lot of growth in social media engagement, because people send DMs, people send, how do we give investment advice through these channels real time? So we are, this is, sorry, I hope I have time.
Please go
on. Communication is quite key, and also we are providing digital libraries and digital resources for our clients to be able to get real-time investment advice and market news. So these are the channels that we're utilizing. Right now, you don't have to, 15 years ago, you had to go to the CMA library in order to get information. You had to physically go there. Right now, we are trying to make sure that students, clients, everyone has access to a lot of this information so that they can make investment decisions. We're also seeing, we're also testing out the use of AI to give investment advice, and also do a bit of portfolio analysis for the clients on our portal as well. So this is very, very exciting, and these are the tools that we are looking at utilizing.
Thank you, Linda. I like the inclusivity and the robo-advisory that you're incorporating into your model, of course, notwithstanding the compliance component from a risk perspective. Please allow me to quickly pivot to Godfrey, a very renowned friend of mine. How can digital transformation support regional integration across East African markets? Thank you, Godfrey.
Thank you, Arthur. Looking at the East African capital markets, you find that Kenya, Uganda, Tanzania, all the platforms that you engage with when you're executing a transaction are unique to themselves. When you're trying to do security reconciliation, the mechanics are all different. I think the first step has to be harmonization or a unifying of those particular platforms across East Africa. And this speaks mostly to ease of the KYC process, creating a digital identification approach, so that if I have a national ID for Uganda and you have a passport for Tanzania, you don't need to provide any other supporting documentation to just get onboarded and do these trades. Now, on the on the journey to doing that, yes, there is the political angle, there are the other special interests across the different markets, but we could take an iterative approach, meaning that the starting point need not be the perfect picture. It could be a point where we could start by deploying digital channels, AI, into smoothing the KYC aspects, and then from that point we can get to see how we then get to smoothen that trading. Now this will enable both the traders, the investors, and all the other participants to easily communicate. Today, if I need to buy a security from Nairobi, I need a Nairobi broker. If I need to buy a security from Tanzania, I need a Tanzanian broker. Why wouldn't a Tanzanian broker be able to trade across East Africa, a Ugandan broker be able to trade across East Africa, and so the Kenyan broker without having to go through any other third-party counterparty? And then the other angle now is on the platform aspect. So most of the structures you see appear to be looking at the traditional securities, equities, bonds. Yes, there's been talk about sustainable investment and the commodity side, but what's happening in the commodity space in Uganda is different from what's happening in Tanzania, although the global frameworks are the same. So how about we look at how we can utilize digital as a tool to create a capital markets platform across East Africa that we can then utilize to both bring on board offshore instruments, and then even delve into spaces like the alternative investments. I'll give a scenario here. An exchange can be a platform that goes ahead to vet the investable companies and then get to package them for us to put the money into. And then that will make it a lot, that will ease the process for capital deployment into those different SMEs. But if Old Mutual, if Sanlam, if all the other companies have to go ahead and do their own due diligence, ABCD, you find that it's a lot more tedious, and the process of capital markets growth will take a longer time to really come to bear fruits. So the platform aspect has to be looked into, and I'll take it back to the remarks by the Director of Financial Markets from Bank of Uganda. One way you can create the platform is by centralizing the CSD and taking it away from the USC and Bank of Uganda and creating it as a separate entity. Yes, the settlement can still happen at the Bank of Uganda, but even that can still be within the same CSD as a separate company. What that will do, Bank of Uganda will still earn the fees, the USC will still earn the fees, but the client will have one portal, one CSD to trade all kinds of securities and investments. Once it's done in each country, then it will be easier to harmonize those particular CSD entities. And this could even be, they could even be privatized to an extent and potentially even be publicly traded. That will really go a long way in bringing on board the different categories of investors across the region.
Okay, thank you very much, Godfrey. I think what clearly comes out is the harmonized trading infrastructure under the East African Capital Markets Infrastructure System. I think I'm also picking up a standardized KYC across the repositories for ease of client trading in the various markets. Thank you. I'll quickly move on to Robert. I think, Robert, you are senior here. Would really like to hear from you in terms of how digital transformation is changing brokerage operations in East Africa.
Sure. Thanks, Arthur, and thanks for pointing out that, you know, as the youngest member of the panel, sorry, the oldest perhaps member of the panel, we've seen a lot of things change since Crested started doing retail onboarding. You know, brokerage operations, to take some of us back in time, also included things like, yes, paperwork, as we've all faced, but even a fingerprint reader. I think the USE had a fingerprint requirement for many years. And now you can imagine how that works up country when you need to carry fingerprints and a laptop and you're trying to do a countrywide campaign. So we have come very, very far, and as a market, we benefit from the adoption of technology. I know yesterday they talked about, some of the panelists talked about the eIPOs, and I was part of the marketing of the very first one, which was the MTN IPO. And I remember when Standard Bank, who were the advisors to that transaction, said, yeah, we're not going to do paper. There's no paper. We're going to do it offline. We're going to do it online on your phone. And we thought it wouldn't happen, but actually it did happen. And I was up country for some of the marketing in let's say, okay, I'll just name it. I was in Arua, and we're in a big room full of people doing a presentation, and you could see someone opening their account while we were in the middle of the presentation on their USSD phones. It was amazing. So what it has done, what technology has done, is made brokerage operations much more efficient, as others have said from the fund manager side. It's also been a leap of faith from our regulator, because the regulators kind of had to be brought along. I mentioned that the USE required a fingerprint for many years, and eventually that went away. The CMA also, thank you, by the way, both of you, for this wonderful conference. The CMA also was able to accept the fact that we had information about clients through the phone. So that was a big leap. And I don't know about in other markets, but that certainly made a difference for us here. Our operations are still changing. The young lady mentioned communication, and certainly from the side of being a traditional broker, we have research reports, we do valuations, and we find the technology tells us who opened our emails or how many visitors have been to the site where we've posted our things. You can see that the longer we have our reports are quite long and detailed, the less readers we get. The market has changed to want immediate information. And yes, there are those, many of us in this room would be those who would go deeper, but really from a retail broker perspective, most investors get their ideas from a page or two. They won't read through a very deep valuation. So we're finding that also changes, the communication side of how we interact with our clients.
Okay, thank you very much, Robert. Efficiency and analytics that informs investor behavior. I'll quickly move on to Dan. Dan, what new risks? And I think I decided to pose this because you're running cheaper technologies. I think given the fact that you're reading the technology world, in your own perspective, what new risks emerge with digital transformation, and how are the intermediaries managing those?
Thank you, Arthur. Yes, you're right. We run Cheaper Cash, a mobile application that allows Ugandans to invest on the US stock market. And the immediate risk I can think about is, of course, system risk. What happens with technology is that there's a lot of fraud, cybersecurity and hacking. There's also a tendency of what we call account takeover. If you didn't know, today someone can operate your bank wallet without you being in the room with them or them being in the same country with you. So that is a very high risk when it comes to digital transformation. So it means you need to have a lot of security protocols for you to operate such kind of service. Then secondly, what digital transformation has done also is that it has also created market volatility. If you look at, I think the lady at the CEO of DPF mentioned it, that people move on rumors, but technology moves rumors more than individuals in community. So imagine those who are trading in countries where blockchain technology is allowed and cryptocurrency. Imagine what happens when a message is sent out about the price of Bitcoin. Apparently, it's thought that it's going to be around $150,000 worth one Bitcoin. But it's done only because technology allows that kind of communication and sporting and that kind of market volatility. So it's highly risky, but though it has more benefits, like everyone has mentioned here, Because then who imagined that you could have a virtual account in the US without actually being a resident of the US? This technology is doing. So we're seeing more advantages, though the risks and exposures are many. We have to work towards making sure that we mitigate and remediate those risks. Thank you.
All right, thank you very much, Dan. Salima, I think we've spoken about, we did have a very comprehensive conversation around ESG and sustainability. From your views, please, how can technology drive ESG and sustainable finance adoption? Would like to hear from you on that. Thank you.
Thank you, Arthur, and good afternoon, colleagues in the room. I will start off by saying, which is really re-echoing what the rest of the panelists have mentioned, the fact that technology has reshaped how we are doing business, but also we can, or we do have the power and the capability to utilize this technology for even greater impact. I will really speak to 2 points of how technology can be used to ensure that we adopt ESG practices in a much better way. Starting off with the fact that in a bid to drive financial inclusion, we can incorporate and use technology to put out information on the products that we are offering, increasing awareness. I know there's already steps around putting products on various technology platforms, utilizing USSD so that more and more people from different walks of life can access these products. I think there is room for us to go further and drive a financial literacy agenda using technology. Standard Bank through Stanbic Uganda franchise does run what we call financial fitness academies, which are aimed at empowering and putting information, the right kind of information into people's hands from all walks of life, using an application, using a particular, group discussions through the various circle groups, because more and more people are utilizing and are picking information from those kinds of places. So as we go a step further and are putting products there, I think there is still room for us to teach, to break down information on the various products, knowing also that they can be complicated, but there is room for us to break them down, and technology can actually help us drive that message and also ensure that it reaches so many people. I do believe a new trend that's going to come up is, and we have already started to see this coming through, the gamification of some of the products that we have, and also driving and ensuring that as we speak to various audiences, we are indeed utilizing something that actually speaks to their needs, to how they understand things to do with finance, to how they understand things to do with investments, and applying that information, breaking it down for them even within their local dialects, so that there's that appreciation and that awareness is driven among the people, so that eventually that translates into overall uptake of the products. The other point on how technology can be utilized to drive sustainability is also around putting together all of this information. I know the various regulators have put in place and are putting in place ESG frameworks to guide companies on how they can incorporate and put up the ESG agenda and embed those into their corporate practices. It will be important that as investors, as fund managers, and various investors who are running those particular portfolios or who have that appetite, there is visibility, there is a place that they can go to in one space and have a comparative view of how the various companies or how the various issuers are putting up this and incorporating ESG into their day-to-day. the other, or that will be important because it will help make investors to make an informed decision as they, skew their portfolios to a particular, ESG practices, but also from a regulatory standpoint, ensuring that indeed the compliance to any ESG guidelines that will be put in place is actually also being followed. So those are some of the two ways that I do believe we can embed and ensure that we are utilizing ESG and using technology to embed ESG practices.
All right.
Thanks.
Thank you very much, Salima. Ladies and gentlemen of the panel, as we come to a close, I feel that you all should be able to give us your parting shots. So in just a minute, I would request for you to give us a view in terms of what you think the future of East Africa's capital markets digital agenda is and what that looks like. I'll start with you, Linda.
Thank you. So I like the slogan for EASEA, and we've been reciting it. We recited it yesterday. One market, infinite opportunities. So this is very exciting for us because integrating with East African exchanges and partnering with brokers across the East Africa region will create infinite opportunities for Ugandans. It definitely opens up more asset classes for Ugandans and also brings opportunity into Uganda for East Africans to also invest in Uganda. So the future is very, very interesting. It's great that a lot of work has been put into this over the past decade, and I'm excited that it is coming at a time when I can reap the benefits of it, as we can reap the benefits of it as Cornerstone asset managers. And we're very, very excited on how we can increase these opportunities. I'm also excited about AI and how it's going to transform the investment space. Because right now, with AI, people can easily, it changes how investment advisory is done. And it can easily ask questions, get market information. So these are very exciting opportunities, and the future looks very bright in East Africa.
Thank you very much, Linda. Godfrey?
So I'll say digital is going to transform the culture around the participation in the capital markets in East Africa. And we are going to see a lot more pressure to create inclusivity programs for the youth. What's happening on the global side is also going to impact a lot how capital is allocated in East Africa, and we're also seeing an increasing narration around creating access to alternative investments, around creating access to offshore oil opportunities. So I predict that there will be many changes in the regulations, because most of the regulations in East Africa get to restrict investments within the region. But because a lot of the young capital is asking for offshore opportunities in terms of access, the regulatory landscape is set to also start to evolve to accommodate that investment end of things. Besides that, what could really get to trigger my interest would be a case where on one platform I can be able to invest across East Africa and see it as actually one market. Because even when you look at the currency side, from a parity aspect, the currencies are literally trading within the same range bound and only affected by what's happening on the global side. So that opportunity will really get to interest me. Thank you.
Thank you very much. Robert?
Thanks, Arthur. I think, what will it look like? It will look a lot like this.
Sorry, I can only do that if something is playing.
Oh, I don't know what I pressed. You see, that's the problem with technology. The future is going to happen for retail investments. It's going to be direct market access. You know, the investors are going to be able to serve themselves for the most part, and should be able to serve themselves for the most part. So, you know, the question becomes, how fast is the adoption of the smartphones which allow it? But even the USSD is working in Uganda, certainly, to be able to allow investors to directly access the market. And I think that is the future.
Thank you very much, Robert. Dan?
I think the East African capital markets should work towards building an inclusive, interoperable infrastructure that allows what you call multi-currency wallets for investment, and also allows onboarding, and also has no borders. Because what technology has done is that, if you take an example of content creation, technology does not allow borders, doesn't have borders. We've seen Ugandans here who do very funny content, and content is shining globally. You understand? So that's what technology does, is that you can do something in Uganda, and then it sells globally without actually you reaching that place. So building a seamless, interoperable infrastructure that does not limit anyone, no matter the border, I think would be the future dream of East African capital markets. Thank you.
Thank you very much, Dan. And I'll conclude with you, Salima.
Thank you, Arthur. I think for me, I'm looking forward to innovations, innovative products, whether it's crowdfunding products, that are best within the region. A few green bonds, because those discussions have been on hand. But as the CMA puts in place a sandbox, I think we are going to, we are ripe for new innovations or innovative investment products that will be game changers within this industry. Yeah.
Thank you very much, ladies and gentlemen. Just a few points, I think, to wrap up from the conversation that we've had. I think we hear that digital transformation is no longer optional. It's redefining how brokers and fund managers operate and engage. The aspect of around integration between the brokers and other intermediaries within the capital markets and financial services becomes more real for we to have a more inclusive client. Partnerships, and I think that came out very clear, that we'll need to do a lot of partnerships with a lot of telecos to further our agenda. Of course, we hear data privacy, the risks associated with the digitization, and what really needs to be, a solution for in that regard. From an ESG perspective, I think technology will continue to accelerate sustainable finance, and of course, making capital markets more transparent and accountable. And as we conclude, ladies and gentlemen, I think what I also had is that the next phase of growth will come from inclusion, trust built on digital transparency. And what success looks like, as I conclude, it will depend on industry alignment. Thank you very much, ladies and gentlemen. Thank you, panelists. We have a photo moment. Yeah.
All right, thank you so much, our panelists, for that very insightful discussion. And you've been lucky enough to be the last panel for this conference and for today. We do have just one more presentation, but before that, Please allow me to invite Sheikh Issa. He's a consultant on the Sukuk. He will be telling us more about the Sukuk and how it operates. Sheikh Issa, you have 7 minutes. And while he's making his presentation, the last team, Mr. Nestor Katende, please be preparing yourself as you'll be coming in after Sheikh Issa. Thank you.
Thank you so much. Good afternoon. I think I'm a lucky man because if you go to an event like this and you are not in the timetable and then you are allocated 7 minutes, I'm the luckiest man, I can say. As she's introducing me, my name is Sheikh Issa. I've been in alternative finance from year 2000. And what we have involved ourselves is to be the consultant, the trainer, the advisor. And alternative finance, this is the term we chose in Tanzania through the Ministry of Finance. In 2021, I think all the countries in East and Central Africa is Tanzania which has alternative project finance policy. So it's also my call to all the East African countries to have that, because if we want to leverage on alternative finance, we should start with the policy before we go to legal and regulatory frameworks and issuance of the instruments. Because without a policy, it will be something benchmarked on individual leaders in the government, especially the Ministry of Finances. And when they are out of the office, there will be no continuity because there is no policy from the government. So we've been working with the central bank, worked with the Central Bank of Tanzania, with the Insurance Regulatory Authority, and with the capital markets across East and Central Africa and stock exchanges. I can see some of my CEOs are here. We've met them several times. We really involve ourselves in the alternative finance, especially in Islamic banking products, in insurance, Sharia-compliant insurance instruments, and in capital markets, we deal with ICM. They're called ICM, Islamic Capital Markets Products. The most famous one is the Sukuk bond. So far, we have involved ourselves in the issuance of Sukuk with our portfolio, just crossed 1 billion, $1 billion US. And we have already done with 451 million US dollars across East and Central Africa. And on the pipeline, 605 million. Some of them were mentioned here. I'd not like to go further on that. So the Sukuk is a feature of the capital markets products. These products, unique as it is, started very long time ago. And it is a precursor to the modern check, the check we use in banks. They came from SAC. SAC means a financial paper. The King George V sent a team of economists to Ottoman Empire by then, in the 15th century. It was a superpower, the Ottoman Empire, to learn how they can rule almost 2/3 of the world. Where do they get resources? And they found they are using Sukuk to pay the officials of the government. So singular for Sukuk is SAC. Now, British failed to pronounce it as it is in Arabic, swak. They called it check. And that is the present day check we have. But it became a new phenomenon from 80s, when it started in the Middle East slowly, but then it went into the mainstream from 2005, when the World Bank issued its first Sukuk bond. The World Bank. It was $200 million US. They issued it in Malaysia. And just 10 years later, IFC, International Finance Corporation, a sister to World Bank, issued their first Sukuk bond. It was $100 million US. Now, what was it? A message to the world that the global financial regulator, if you can call them, the World Bank, the IFC, they have also tapped in Sukuk. But Africa has been slow to leverage into Sukuk bonds. We began in 2014 with South Africa issuing their maiden Sukuk. It was $500 million US. But the same year, 2014, UK issued their first Sukuk bond. UK, 200 million pounds sterling. They repeated it again in the middle of COVID, 2019, 500 million pounds sterling. That is UK. The same year, 2014, Hong Kong issued their first Sukuk, was $1 billion US. Hong Kong, that island. What do they miss, which we have? We are poorer than them, poor countries, but we are not even copying from what they do. What is in us, is this what they taught us? Think outside the box. At this age, I have believed that's not the correct stand. We have to think inside the box, not outside the box. Because when you're looking for what is outside the box, you might be missing what is inside the box. The capital we look from European countries is plenty here. Tanzania has showed good example. All Sukuk bonds issued in Tanzania are oversubscribed. Just last week, CRDB announced their Sukuk bond results. In T shillings, it was 418% oversubscription. In the US dollar, 646 oversubscription. The Zanzibar government Sukuk, of which we structured, it was oversubscribed by 281%. So the capital we look outside is within here. Look, we have got Islamic banks, we have got halal funds, we've got insurance, Islamic insurance. All of them, they need Sharia-compliant instruments. And they've got a lot of funds. 2 months ago, I was here in Kampala. I visited Salam Bank, the first Islamic bank in Uganda. They are suffering from excess liquidity. They cannot invest in government bonds issued by Bank of Uganda because it's not Sharia-compliant, it's interest-based. They are Sharia-compliant bank. They have to find Sharia-compliant instruments. There are none in Uganda. They were even talking with us, can we come and invest in Tanzania? I said, yes. They are finalizing arrangements. We had a Sukuk bond coming, which was around $32 million US. They were ready to invest 8.5 million, Salam Bank. And yet we are looking for capitals for our products. This is very ridiculous. We have got to learn to change, and changing is, capital market is where money is. We are late, guys. You know, the first bond was issued in 12th century in Venice, Italy. And it was for what? For war. That's the first bond globally. In the Western world, money is in the capital market, it's not in the banks. We all know banks have no money. When you start a bank, what you need is just what you call the federal, what is it called? Reserve. You need to put the money in Federal Reserve, and then you are waiting to get the surplus saving units to bring money to you, and the surplus deficit unit to come and borrow from you. And that's why the bank's loans are very expensive, because there are 3 things a bank will have to consider to give you money. First, it considers who put money into the bank, how much they will get. And then the overhead cost of the bank, they add it there. And then they put their profit. 3 things, you bear them. But when you go to the capital markets, terms and conditions for the issuer of a bond, whether conventional or Sukuk bond, you make the terms and conditions yourself. Nobody makes terms and conditions. You decide even how much return to the investors. You decide. The capital market is where money is. All the time they fooled us. Nairobi Stock Exchange started in 1954. What about Dar es Salaam Stock Exchange? 1998. What about Uganda Securities Exchange? What about Rwanda Securities Exchange? Our capital markets are niche. They are still very young. Why? Because the colonists left us believing money is in the bank. While money is not in the bank, money is in the capital markets. Go to New York, the New York Wall Street. Go to London Economic Street. That's where you will find where money is, where people go and trade. Even the banks. Tanzania now is leveraging, banks are leveraging on Sukuk. In 2022, I structured the Kenya Commercial Bank first Sukuk, Sahal Sukuk, in Tanzania. We were looking for 10 billion, we got 11 billion Tanzanian shillings. In the same way, Amana Bank issued Sukuk. And then CRDB has issued a Sukuk bond. We have had here NMB, they issued their bond. What are the banks looking if they've got money? What are they looking in the capital markets? It shows they don't have money. Because if they had money, they would not come to the capital markets. All right? So we own everything in the capital market. We don't realize we are the big elephant in the room if we decide. And we can drive our country's economies, development, in corporates, in government, in everything, and we will all make fortune out of it. We'll make wealth out of it. I don't have to take more time than this, but I was just making a remark. Thank you so much for listening to me.
Sheikh, you have done well. I think if every speaker was as passionate as Sheikh, it would be very difficult to stop you. Because Jacinta was busy telling me, can you find a way to tell Sheikh that the time is out? I said, no, you see the man is speaking, all the hands are up. Then you stand next to him, start time out. It's very, very difficult. Sheikh, we want to thank you very much. From yesterday, it was very difficult for me. I was just hearing sukuk, and I said, sukuk is what? But now I've at least tried to understand a bit of what sukuk is all about. Ladies and gentlemen, we are almost done. Congratulate your neighbor and tell them we are almost there. Tell your neighbor. Give them a high five and tell them thank you for staying resilient. Give them a high five. All right. So for our final presentation, I want to invite Jacinta here. We've agreed with our final speaker that it is that person, the speaker, between them and lunch, and then our final giveaway ceremony. There are some of you who I have not seen here in the last 3 hours. You have just come in because there is an award ceremony. We are going to give hampers. If you are part of you, if I am speaking to you and you know that you have done it, God is seeing you. Jacinta, come and invite our final speaker.
I think before I invite the final speaker, just to be clear, there were some misrepresentations there, but we'll have that discussion later. Our next and final presentation is from Mr. Nestor Paul Katende, who is the CEO and founder of OTIC Foundation, and his presentation will be titled The Agentic AI Leap, a systems thinking approach to building autonomous capital markets in East Africa. So this is about AI. And Nestor, as you have been informed, we are looking forward, we're excited to hear about AI, but we are also, it's you standing between our lunch. And so that means we're very attentive and also very time conscious at the same time. Let's put our hands together for Mr. Nestor. Yep.
Good afternoon, ladies and gentlemen. It's a pleasure to be here. I want to thank the Capital Markets Authority and the Uganda Securities Exchange and the different partners that we have for organizing this conference. And thank you so much for inviting me to be here. My name is Nestor Paul Katende, and I am privileged to be the founder and group CEO of OTIC Group. Essentially, we are democratizing artificial intelligence across the African continent. We work with different private companies, the public sector, and the corporate sector in building agentic AI systems. But also in there, we are deep into AI education and AI democratization across the continent of Africa. We are also based in Kigali, Rwanda. This conversation is very critical and very urgent, ladies and gentlemen, and allow us to have a depth discussion. When I was humbled to be contacted to speak on this topic, I thought of a topic that could be relevant in tandem with the dispensation that we're in right now as in our human existence right now. And that is the topic of agentic AI, the agentic AI labor systems thinking approach to building autonomous capital markets in East Africa. Before we delve into this conversation, ladies and gentlemen, and I'm aware that we're going for lunch, but it's going to entice you so well. Before we delve into this topic, the reason as to why I gave it this title is that even in the conversation of digital transformation, you have to be relevant in defining the conversation of digital transformation as of, what level of digital transformation are we talking about? Because the conversation of digital transformation in 1972 is definitely different from the conversation of digital transformation in 2025. The conversation of digital transformation in 1970 is different from the conversation of digital transformation in 2024. But deeper than that, we have entered into what we call an unprecedented growth of technology that now, even the conversation of digital transformation as of January 2025 is different from the conversation of digital transformation as of October 2025. And so it was important for us to have a conversation of digital transformation relevant in tandem with the times and eons that we're in right now. But more than that also, it was important for us to define the systems and structures that must support that transformation that we're in right now, and that is the systems thinking approach, whereby we are approaching digital transformation of capital markets from a holistic point of view, dealing with the whole ecosystem of financial markets, aside from handling it from a siloed approach. Siloed digitization of building products for the regulator here, building products for the investor, for the exchanger. We're looking at it from a holistic approach. And therefore, ladies and gentlemen, that understanding there is what prompted me in that inflection point to come up with that relevant topic that you see there. Ladies and gentlemen, that is me. I'm humbled to be here. Thank you. Ladies and gentlemen, I am an ardent scholar of progress. I've taken time to study how companies and organizations can be relevant, why companies and organizations or generations go past and stand and be resilient over dispensations of human existence, why some companies fail and why other companies fail, why some associations keep on, why some generational, why companies are generational in terms of stability across the different tides of time. And in that inflection, ladies and gentlemen, I understood one critical point, that you cannot have a strategic direction of where you are going without understanding where you are coming from. It is important for you as an organization or as an association to be pinpoint, to be relevant, to have the language that is necessary for your dispensation, to be at the cutting edge of your time, to understand where you're coming from first, because therein lies the wisdom to give you that direction. Those of us who read the Bible, Proverbs chapter 22, verse 28, the Bible says, do not remove the ancient landmarks which your forefathers set. It means it's important to understand that the direction of your organization or your company, your association, in there, the pattern is that new wombs come from old wombs. And so in that understanding, ladies and gentlemen, there was a gentleman called Gordon Moore. Gordon Moore was a futurist, right? He was one of the co-founders of Intel. And he came up with a law called Moore's Law. And Moore's law is the law where he said that computing power doubles after 2 years, right? And so in that understanding, he came up with the understanding that after his observation of how technology is progressing over time, computing power doubles after 2 years. There's a doubling of computing power every after a 2-year dispensational leap. That has been the tide that is driving the digital boat right now in our dispensation. But for those of us who are keen students of progress, as you can see there, 2025, 2027, and what have you, here you are having, traffic optimization, AI, machine learning, and what have you. I think all of us are familiar with that. When you go deep and understand and study the sands of time in there, you realize that the world is shifting. Okay, this is something I want to talk about as well. The major concept and driver of Moore's law was the miniaturization of transistors. So they become bigger and smaller and smaller. There's a time where a transistor was as big as that movie screen, but they become smaller and smaller and smaller. Hence, we're getting into what we're going to talk about, autonomous IoT. But if you're an ardent scholar, ladies and gentlemen of progress, like I'm telling you right now, to fashion and understand transforming capital markets, we need to understand where you're coming from and be an ardent scholar of progress, because therein is a wisdom, ladies and gentlemen. You understand that over the past couple of years, we have moved into what we call the law of accelerated returns by a gentleman called Ray Kurzweil. Ray Kurzweil said that, the world is moving from simply a 2-year dispensational leap of computing power. It is now moving into an exponential vertical curve. That even when you talk about AI right now in 2025, he's trying to tell you, in other words, ladies and gentlemen, that the conversation of AI as of January is different from the conversation of AI as of December. It's not going to pivot and change in 2027 for you to have a wow moment. It is moving at a rapid, crazy, momentous speed. And ladies and gentlemen, as you can see there, the curve is an exponential curve, right? And so if you compare and see, for example, by 2030, we'll move into the AGI, artificial general intelligence, global connection is going to come through there. By 2066, we are going to enter into the ubiquitization of AI, or smart infrastructure, and then, of course, we shall have transhumanism and all that by 2040. The curve is moving. It's moving so fast. And so when you compare Moore's law versus accelerated returns, ladies and gentlemen, you will see there that the curve here was a bit, it's a 2-year dispensational leap, right? And the focus was integrated circuits, transistors on chips, the driver of miniaturization. But look at where we enter 2025. We're moving into what they call singularity, the narrative and notion that at a particular point, AI is sort of going to have, a sentient kind of thing, like a consciousness where we are going. And it's driven by intelligence and knowledge. That is where we are in 2025, ladies and gentlemen, and that should be the conversation of digital transformation in capital markets. At the cutting edge, la creme de la creme of this conversation, that should be the one. So where are we right now in shaping East Africa's capital markets, ladies and gentlemen? We did the necessary phase one. We moved from paper ledgers to digital platforms, from flow trading to mobile application. That was the necessary phase one, but that is not enough, ladies and gentlemen. We must innovate for the future. At this particular moment in time, the conversation dominating digital transformation aggressively should be around AI and machine learning, sustainable finance platforms, blockchain, and decentralized finance for inclusion access. From simply moving from efficiency to evolution. And so when you understand this, you understand that we have entered a very interesting space, ladies and gentlemen, that what I call the reactive market paradox. And the reactive market paradox is that we are dealing with digital transformation, ladies and gentlemen, in siloed reactive systems. The investor reacts to price swings, the regulator reacts to compliance changes or compliance breach, and the company to quarterly pressures. That is very dangerous where we are going. It's a reactive, siloed approach. You are digitizing from a siloed approach. You build a platform for the regulator, then you build a platform for this. Where we are going, and I'm going to show you the problem, what's happening here, is that universal reactivity leads to friction, latency, and inefficiency. Essentially, I say that we are running a relay race with handcuffs on, and the consequences, ladies and gentlemen, is shallow markets, 25% liquidity, scarce liquidity, and high cost of capital. So our current reality is that we are manual, slow, and it's expensive because we're dealing with digital transformation from a siloed approach, number one. Number two, a reactive approach. Number three, from a simply a phase one approach. So I move into agentic AI. So with that understanding, now we know exactly what we're dealing with. Our minds have been recalibrated to have a critical discussion on the cutting edge. And that's agentic AI, from reactive computation to proactive strategy. How does the la creme cutting edge conversation of digital transformation in 2025 look like? And that's why I said the agentic AI leap, ladies and gentlemen. And I give an example. Maybe some of us have not interacted with agents. It's a simple example, and I'm going to relate it with what we're talking about here, as you can see on the screen. Look, for example, at a calculator, right? You type 2 + 2 is 4, and then you give it your input, and it gives you an output, right? The difference between a calculator and an agent, so let's say, for example, you are the chief investment officer. And so you have your calculator, so you put in your math, and you want it to give you feedback. However, after the calculator gives you that answer, you, the chief investment officer, you already have the strategic direction of why you want that answer, isn't it? So it gives you that answer. You say, okay, thank you for the answer. Now I want to deduce a particular strategy from this answer. I want it to do, I intend that the answer that the calculator has given me is supposed to come up with A, B, C, D, informing my bigger intention of why I'm using the calculator. The agent does everything for you. The agent, ladies and gentlemen, and allow me to read something here I wrote for us here. It is, agentic AI is fundamentally different. It's proactive and goal-oriented, right? It does what you mean to do, not necessarily you giving it answers, giving it data, all right? So it is the digital embodiment of a chief investment officer. Literally, it's doing what you are requesting it to do, but more than that, it autonomously, right, through different data streams and data collection points, has an intuition to autonomously think and do far beyond a normal calculator can do. So comprehends the global context, assesses dynamic risk, devises multi-layered strategy, negotiations, and execution of complex objectives. And the difference here, ladies and gentlemen, like I told you, the earlier conversation of AI was simply your normal ChatGPT, your Gemini AI. It was mostly reactive. Many of us use ChatGPT. That's not where we are right now. Like I said, your language of AI should change. It was more of a reactive AI. Now, we are talking of a proactive AI, and that is exactly where agentic AI is. So we are pivoting from calculation to recognition. Latency reduced by 90%, capital allocation versus 2.1x. And so the agentic AI in action, ladies and gentlemen, as you can see here, that you input the data streams, the global market data, the regulatory compliance feeds, the microeconomic and geopolitical context, and the AI agent reasoning and execution engine. The output is dynamic capital allocation, optimized portfolios and risk partnerships, new investments and product innovation. So it comes up with that autonomously, right? And the impact metrics, as you can see there, reactive versus agentic AI, reduction of latency, market depth increase, proactive compliance, and what have you there. So from manual computation to autonomous strategic execution. And ladies and gentlemen, with that understanding of where we are, as I'm about to finish, that is where now we launch into the systems thinking approach. Now, we could have a conversation of 2 hours on systems thinking, and we can delve into that, but that's not for today, only because of time. But you cannot talk about that power of technology from a siloed approach. You cannot simply build AI agents from simply the regulator or simply the investor or simply to harness that full power of technology, you must think capital markets as a system, as a living, breathing, interconnected, interdependent ecosystem. And that's what we're going to talk about in these next few minutes. But the problem, ladies and gentlemen, as you can see in that slide, is that we are viewing, for too long, we have viewed our capital markets through a mechanistic lens. We see the regulator differently, like I told you, exchange differently, alone, broker alone, And the problem, as you can see here, from viewing these actors of the capital markets ecosystem alone, is that you're going to create a problem because you create, you optimize and create products, or digitization product with pinpoint-based problems, right? You deal with the exchange alone, like I talked about. But systems thinking combines all of them, and allow me to read something here that I wrote down for our notes. Maybe some of us are taking some notes. For too long, we have viewed our capital markets through a mechanistic lens. We see a regulator and an exchanger. We treat liquidity, volatility, and fraud as separate problems to be solved with separate point-based solutions. But systems thinking reveals a different truth. A capital market is not simply a machine. From this understanding, it's a complex adaptive system, a living, breathing ecosystem that has emergent behaviors, that has unpredictable outcomes and feedback loops. In that understanding, I hope I'm not losing anyone, but probably we shall have a Q&A after, right? And so, we optimize in isolation, like you can see there, and that leads to liquidity, volatility, and so, you have the point solutions. But then I said the mindset shift is when you're dealing with this kind of system, agentic AI requires a new perspective. So I'm looking at holistic solutions via agentic AI. What I'm trying to say is we are going to have to build agents that interconnect all these different actors, and I'm going to show you a three-phase approach on how to do that. Just a little bit about that is that it's a dynamic system. It's not a machine like I talked about. It has feedback loops. Maybe let me talk about that, a web of interconnected and interdependent actors. Probably talk about feedback loops. What I was talking about is that, for example, regulator A tightens rules in country A, and that leads to speculative capital shifts in country B, and then creates a bubble. Are you seeing that? That's what they call a feedback loop. Let's look at the emerging behaviors, collective actions, and unplanned outcomes. Collective fear from investors, it triggers a market-wide sell-off, unintended outcome. So you're looking at capital markets, ladies and gentlemen, from an ecosystem view, not an isolated view. All right? Let's look at the deep interconnectivity, the systematic and economic repercussions of ESG, company-level neglect. A company A and I invest in ESG, right? Environmental, social, and whatever they are focused on short-term cost savings. What that does, the ripple effect and sector-wide risk. Increased perceived risk for entire sector, and that leads to a systematic economic repercussions, as you can see there. So conclusion, interconnectedness turns individual choices into a collective financial destiny. So the problem, like I said, digitization, fast parts, unhealthy whole. The current approach, isolated optimization, like I talked about. Digital components are optimized individually. The flow, a fragmented system health. So what we have right now are faster parts, but no improvement in health, stability, or growth of the entire system. So ladies and gentlemen, I want to finish this, that if we are looking at the different types of agents we can build because of time, number one, we're looking, for example, at the liquidity agent, a symbiotic organism of market health. Now, I think I'll probably share this PowerPoint. I already shared it with CMA for some of us to delve deeper and understand this because of time. But the liquidity agent, the systematic order here, liquidity scares away large-scale investment. It stifles company growth and makes our economies fragile. But the solution here is a network of cross-border liquidity agents proactively identify and heals liquidity gaps, leading to systematic liquidity resilience of the whole ecosystem, right? Very fast, we have the ESG validator agent. We are in the feedback loop of trust, lack of trusted ESG data, but what are we looking at here? with this agent, fundamentally alters incentives, steer a system towards long-term sustainability. We have the regulator Sentinel as well that we can talk about. I'm talking about here that, that reactive regulation treats symptoms and addresses vulnerability. Pandemic after millions are infected. Can we build an agent that detects pathogens early, protects cells without shutting down the whole system? So, this is my phase of approaching. This is not rocket science, ladies and gentlemen. And I'm very privileged that our organization actually builds these AI agents for different corporate organizations on the continent. This is not rocket science, ladies and gentlemen, this can be done. Number one, 6 to 12 months. One, action, form the East African Agentic AI Alliance, quickly, very fast. Can we have the ethical AI framework? Task force of regulators, market infrastructure, and tech innovation incubators. Number two, this is very critical, ladies and gentlemen, from a data point of view. Mandate machine readable. We need to have readable data across standardized machine readable formats. Phase two, 8 to 12, 24 months, launch pilot agents. You know, can we create a regulatory sandbox around that? Someone talked about it here in that regard. And also upskill our training people, the AI quotient training programs. Ladies and gentlemen, we need to upskill our people to understand these conversations right now. Banks, brokerages, and hybrid workforce, regulatory bodies will do corporate AI skillings as well, and we actually build AI agents. These are very simple things to do. And lastly, practical first approach. Here we talk about scale and integration, successful pilots, you know, and evolve the regulation framework. So ladies and gentlemen, we need to change our conversation. That if the coordinate of Africa, if East Africa should stand and be relevant and pivot this conversation of digital transformation, then I think we have to get our hands dirty and actually begin to build these systems right now with what we have. And that is why I was able to have this conversation. The leap is before us. Let us take it together. Our choice is simple. East Africa's united future, intelligent, autonomous, and sustainable systems. Ladies and gentlemen, thank you so much for listening to me. These are conversations that are critical in our boardroom discussions, but more than that, a phased approach and practical implementation is necessary for us to drive the next edge, the next cutting conversation of digital transformation, not only from isolated optimization and building of products for different actors in the system, but looking at it from an ecosystem point of view, working together for all of us in East Africa, and see that we change the conversation. Thank you so much for listening to me, and thank you so much for the invitation. Thank you.
We had a reason to why after Sheikh we put Nesta. Because we knew that the kind of audience we have is notorious. They start to present signs of being tired. And so we had to make sure that the speakers we put is immediately after Sheikh, you bring Nesta. And so I must say that if you have been dozing, you need to see a doctor. Yeah, it's beyond normal. That dosing has now escalated to a disease. You need to see a doctor. Can we clap for that gentleman once again? I think it's one of those presentations where I have been understanding and getting lost. I've been understanding shallow markets, scarce liquidity, high costs, agentic AI. And then I started to get, where I got lost really, I started to see things like exponential vertical leap, ubiquitous AI, symbiotic organism. I asked Jacinta, are we in biology or computer? Because now symbiotic organism, singularity narrative in emotion reactive market paradox. Next, I need your card. I don't know if there are people like, you know, I'm sure that many of you have been understanding, but there is someone like me who got those. I was asking some of the words, because I was trying to really keep up to speed. As I was putting the word exponential vertical leap in Google, then it came ubiquitous. So no sooner hadire hadai, symbiotic organism. I just wrote them down. I said, let me leave the man to do what he wants. So generally, this is how we have moved. I think you're happy of how we have ended. Some of you, the ending has brought more questions than answers. I asked Jacinta, should we move the mic around for question and answer? But I think now, next time we will not give you Q&A because it's possible that people will ask you and you'll continue ubiquitousing us. We shall not allow you. So allow me to invite Jacinta again so that we can do the closing remarks.
Okay, thanks, Gava. Ladies and gentlemen, we have come to the near end of this two-day event. And of course, we need to bring it to an end with a bang. I'd like to invite Mr. Pierre Celestine Rabukumba, who is the CEO of Rwanda Securities Exchange and also the chair of the African Securities Exchanges Association, and to give us a few remarks. And then after that, we'll hear from Mr. Paul Bwiso. Celestine, you're welcome.
Thank you, Jacinta. The USC, the Capital Market Authority, I would like to stand on all protocols already established since yesterday. What should I say? I'm honored to stand here, first of all, proudly for being East African and for contributing together with my colleagues, all of you here, in the past 2 days. It's been amazing. It's been great. Uganda, you have done a very good job. I think you deserve a round of applause. From the sponsors, the speakers, the MC, I think I might steal him for ASEA too next month, because it's been great. And I think from the speakers to extracurricular activities, everything was excellent. So without any further ado, this is the type of thing we have always wanted to have in East Africa. You know, it starts domestically, and then it goes to the region, then the whole continent. I think we have all we need in our continent, in our region, in our countries. All we need is just to put all the missing parts together and work together. I always say we are stronger together, always. Because individually, we are just in silos. Individually, we are just poor. But collectively, we are very rich. We are a rich region, a rich continent. So capital markets have been there for centuries in other countries, built their countries. It comes to our countries, we run to the World Bank and the IMF for consultations. But the capital we heard yesterday from Mr. Patrick, $700 billion are sitting within the pension sector alone. I'm not even mentioning our sovereign funds, because there are many on the continent. The small country of Rwanda we have, I think it has about almost $400 million. It's only barely 10 years old. And Rwanda is a small country. So now you can imagine if we put our minds together and we support our businesses through the capital markets. I have nothing against banks. Banks are good, but they are good to a certain level. Capital market, you are dealing with the owners of the capital themselves. So I think we put all that together with the AI and all the technology that we have available, we will do it. So I will not take too much time. I just wanted to thank you again and invite you to our next, I think Paul will say what he has to say about what is going on with this activity, the Capital Markets Day, that is going to be continuing even beyond East Africa, but being done by East Africans to expose our region to the rest of the world. So that will happen. So, maybe Paul will expound on that. But next month, on the 26th and to the 28th, we are hosting also ASEA in Rwanda. That's the African Securities Exchange Association. You are all invited Please, the same way you supported this event, let's support the continental-wide event because it's also rich in conversations, the people, and venues. You are all welcome to come to Rwanda. Maybe I will have time to run that 30 seconds video again, if possible. But other than that, thank you again, and I don't want to stand between you and your lunch. Thank you very much.
Welcome to Rwanda. The land of 1,000 hills and one big opportunity. Where heritage meets innovation and tradition inspires transformation. (26 to 28 November 2025). The world of African capital markets converges in Kigali, Rwanda.
Welcome to Rwanda. From the heart of Kigali, we proudly welcome you to ASEA 2025 Annual Conference, where Africa's resilience meets Rwanda's spirit. This is more than a gathering. It's a commitment to shaping capital markets that are innovative, inclusive, and ready for tomorrow. Join us as we showcase Africa's strength, potential, and the partnerships that will define our shared future.
ASEA Conference 2025, hosted by Rwanda Stock Exchange, unites visionary minds shaping Africa's financial future. From culture to capital, from hills to high tech, Rwanda leads by example. Join us in Kigali. Be part of transformation. Be part of the future.
Sorry for this. I forgot to mention my colleagues. They are here. Anyone who wants to register, definitely they can be supported and sponsored, by the way, for that matter. So can you stand up, please? Flora, the lady in glasses, and Lillian, and Mr. Robert, so they can be able to assist if anyone wants to register or ask more questions. Thank you.
Thank you so much, Celestine, and we do look forward to seeing you in Rwanda next month. I know it will be equally very informative and exciting. As we prepare to hear the closing remarks, we want to give one last opportunity to one of our sponsors, MTN Uganda, to give sponsor remarks. MTN Uganda, are you ready? Okay. Yeah, so Amanda, will you be making those remarks? Yeah, a round of applause as Amanda just gives us their remarks on behalf of MTN.
Buying and selling your shares is simpler with USSD.
PKF, please
to
prepare
buy
yourself.
shares using
1
USSD.
minute. You'll be coming in after Amanda, and then we'll have the closing remarks. PKF, Mr. Innocent Dankaine, you'll be speaking after Amanda. Thank you.
Good afternoon to everyone. Thank you very much for allowing us to be part of this great conference. It has really been an interesting 2 days, and it was, interesting listening to the different panelists. Indeed, what I pick out of this is that we really must collaborate, and active collaboration, if we are to move forward. It would be sad if after such a great conference, we just leave everything we've learned here. We really need to move forward in the spirit of the East African, the word has gone. But really just to say thank you, and looking forward to participating in the next conference from MTN Uganda. We always say that together we are truly unstoppable, and as the East African community, surely we are unstoppable. So thank you very much, and God bless you. Thanks.
I don't know if PKF is in the room. Mr. Innocent Dankaine. Is he? Okay. Seems to have stepped out. All right, ladies and gentlemen, With that said, please join me as we welcome the CEO of the Uganda Securities Exchange and the chair of the East African Securities Exchanges Association, Mr. Paul Buiso, who is also my boss, so you really have to clap as we welcome Paul to give his remarks and also to, bring this event to a close. Ladies and gentlemen, those hand claps. Thank you.
Thank you, Jacinta. Good afternoon, ladies and gentlemen. I think a few words I picked out today. Our simple choice is one market. I think I've finished. We can go. Anyway, ladies and gentlemen, I must first of all thank you for staying the course over the last 2 days. It's been rich, it's been entertaining, it's been lively, and I must say there's a lot that I've learned from this particular conference that I would not have learned in my day-to-day reading. We had a keynote speech yesterday, and we also had the guest of honor. My takeaway from the keynote speech was, let's think outside the box. Let's get out of our silos, and let's create products that work for us. The guest of honor spoke to the tenfold growth strategy for Uganda, but he also spoke about sharing knowledge across East Africa. And I thought that he brought out a particular point that said, we in this room might be the problem, and we need to look internally to see how to resolve those issues around raising capital. But he encouraged us to continue sharing and working together so that we can build one East African market. That speech specifically talked about a number that was 311 million people within the East African community. That stood out for me. And what that means is that there's a lot of opportunity within that space. I don't want to go over the details, but overall, we've had conversations around the market overview and the future of the East African capital markets. That's where we had the CEOs from the exchanges speak, and they shared their insights and updates on the status of their markets. We had a very good presentation from Bank of Baroda, where he spoke to investment opportunities and how one can leverage investments within a listed company, but why it's also good to go public and raise capital. We had discussions on the fixed income market, and at that, we spoke at length at how technology has enhanced growth within the bond markets, but the fixed income market specifically, with a lot of opportunities within that. The technological team was also quite brief, but also showed that looking at our main theme, digital transformation, it is the way to go. It's not optional, and what we need to do is leverage that. I think while I was speaking with Josephine, we said that technology has solved the how. We now need to address the why. And if we can't figure out the why, going back to the keynote speech, then we'll get stuck with all this technology that we cannot deploy to address the needs of the community. We had a fireside chat on issuers and retail, the impact technology has had, but also thereafter we had a conversation on ESG and the 3 essentials that stand out in terms of environment, society, and governance, and why it's important. I really liked the presentation from FSD this morning, the deal flow facility and the work they are doing, and around SME investment readiness. And I would ask you to give them another round of applause because that is exemplary. Our regulators sat here and took us through the different trends, the work they do in the background in developing rules, the collaboration, among others, and looking at IASCO. We also looked at unlocking finance through agriculture. And that panel did explain a lot around farming, agricultural solutions, technology, among others. We had our market intermediaries participate here with brokerage and fund management, and they showcased how technology has enhanced the work they do and simplified access to the markets. So, ladies and gentlemen, I'll quote the late Charlie Munger. This is a gentleman who was a partner of Warren Buffett. And he said, the best thing a human being can do is to help another human being know or learn more. I do hope that today and over the last 2 days, we've been able to learn more, and the people who came here, traveled far and wide to join us, were able to inspire you and educate you and provide more knowledge for your progress. Now, that was about the conference, but it's important that, again, we looked at, I hope you're able to network, meet peers, industry leaders have been here, and I do hope that you've left with contacts and can be able to grow your businesses, and these connections should be for a lifetime. But if I was to also quote Mr. Gava here, he said that if they didn't work, nabya mubiveko. So let's build on these connections and explore opportunities around these collaborations. Now I'd like to appreciate quite a number of people. I'll start with the sponsors. Really a large, yes, thank you. Our speakers, our panelists and moderators, please. And not to forget the Ugandans who are here, because we might speak to so many people who've come around, but also for you coming through and attending and supporting the capital markets, because friends of the capital markets are really appreciated. So, round of applause for yourselves. Importantly, I would like to thank our guests who came from East Africa, South Africa, and traveled from afar. Thank you, thank you, thank you. Mwebale nnyo okujja. Because it's not every day that you get such a big delegation from East Africa representing the capital markets and sharing your insights. We really, really appreciate it. And from the bottom of our hearts, we must thank you. I would like to thank our service providers, the Sheraton Hotel here, for their service, Etroka, Nyonyi Cultural Group, and all the others in the background that have been able to support the decoration and this particular event. Thank you for your input in delivering a successful conference. Now, for this particular group, I'm going to invite them to come up. Our MCs. Jacinta, Ibrahim, Lynn, please. This team here has done an incredible job to keep us awake. They've been fantastic. That's even an understatement. Please. You could stand up, and I would ask you to please stand up, because I also want to test a teacher here who said, and we see how skilled he is. To stand is to sit, to clap. Okay? Stand. Yeah. The teacher has failed. But anyway, ladies and gentlemen, to stamp, to sit. Yeah. So, a round of applause for them. Thank you very much. Ibrahim and Tim, Lynn and Jacinta. Really appreciate it. So, in closing, I would like to thank our guests who traveled, and all of you here. I would like to wish you safe travels wherever you're going. Would like to thank you for the knowledge you've imparted, and we look forward to the next East African Capital Markets Conference. We do hope that the theme, I think justice was done to the theme, digital transformation and sustainability finance. I think we've addressed those issues, but I would like to say that the call to action is really action in this case. We've discussed, let's go implement and not leave these in our notebooks, but ensure that there is action taken. The next conference will be held in Rwanda, but prior to that, we will be holding one in the Middle East, probably Dubai, and we'll definitely reach out to you all on that front. I would also like to, I think there's a group I left out to thank. There's an organizing committee from both the Secretariat, EASEA Secretariat. Please come and join me up on stage. Jacinta, Sarah, John, Kyle, Lynn, and anybody else from CMA I might have missed. Norbert, yeah, okay. So gentlemen, and ladies and gentlemen, this is the reason you're here, and this is the reason you had a successful event. They're the organizers behind it. Oh, good. I think, Jacinta, you had one item to address prior to closing, so I'll probably hand back to you, and then I'll just come into.
Okay, thank you, Paul. Sarah, maybe I'll invite you as well. So these are certificates. For those of you who were in the room yesterday, we had the launch of the East African Exchanges Top 20 Index. And so we are just recognizing some of the companies that have been able to make it to that index and to encourage them as well. So we'll not read out all the names. If you're interested, all the information is available on our website, but we'll just invite the country representatives for the different countries that make up the exchange, and we are quite confident that you will deliver the message, as most of these companies, a large number of them were not able to join us here today from across the region. We'll start with Tanzania. From Tanzania, we have, how many is it? Yes, so I would like to invite Mr. Peter Nalitolela, who is the CEO of the Dar es Salaam Stock Exchange, to receive these on behalf of the Tanzania community. And under these, we have the Tanzania Cigarette Company Limited, the Tanga Cement Company Limited, Tanzania Breweries PLC, NMB Bank PLC, and CRB Bank PLC. Is Peter in the room? Yeah, okay. Mary, who is their chief legal counsel at DSE, is here. So to receive those on behalf of the Tanzanian countries here. A big congratulations to those companies who have made it to the East African Exchanges Top 20 Index. Congratulations. Right. We'll move on to Rwanda. Rwanda, this will be received by Mr. Pierre Celestine Rabukumba, who is the CEO of Rwanda Stock Exchange. Very quickly, We have Bralira PLC, Bank of Kigali PLC, and Bank, Rwanda PLC, Simera PLC, and MTN Rwanda Cell PLC. The team from Rwanda, maybe you can join Celestine as well. Robert, Flora, Lillian, please join on behalf of the Rwanda team. Those are the companies that have made it to the East Africa Exchange's top 20. Big congratulations. Congratulations, a round of applause, the top 20. We'll now move to Kenya. On Kenya's side, okay, before we move on to Kenya, we want to give a special recognition to NMB Bank, Kenya PLC, a round of applause. They have not only been our key sponsors in this event, but are also among the top 20, and would like to give them a recognition. We've had a large turn-up from the team from Tanzania. We've also learned a lot of Swahili, us as the Ugandans. And so we want to recognize them, the team from NMB. I think I saw Edgar Ndani somewhere at the back. And the entire team from NMB Bank. A round of applause as you come up to the front. Mary, painfully, I have to call you back so that you can hand over this as well. If I knew the Swahili word, I promise I would have said it, but unfortunately I don't. Kuja, it sounds rude. Okay. But asante sana, I think that can be a start. Yeah, that's a team from NMB Bank. Another round of applause. They came in such a huge number. Mwebale nyo, mwebale kuja. We're very happy that you've been here with us for the past 2 days. NMB Bank. Right, we are almost there. Kenya, now we are in Kenya. We have the Corporate Bank of Kenya Limited, Absa Bank Kenya PLC, Safaricom PLC, KCB Group PLC, and Equity Group Holdings PLC. This is the team from Kenya who have made it to the top 20 EAE index. I'd like to invite Mr. Jesse Kagoma from CDSC, Nairobi, Kenya, who will receive these on behalf of the Kenyan companies. A round of applause, ladies and gentlemen. Asante sana. Right. And yeah, finally, I'm now home. The Ugandan companies who have been on this list and have made it to the top 20 index representing Uganda, top performing companies. We have MTN, Uganda Limited. We have Stanbic. For these ones, you're privileged enough that the CEO is here. We're on the same soil. So if I read you out, please come, the Ugandan companies, and to receive your certificates. MTN, Uganda Limited, Stanbic, Uganda Holdings, representatives from Stanbic, or maybe we can have SBGS. Is there anyone from Stanbic? All right. Bank of Baroda. Do we have any? Bank of Baroda? All right. QCIL, which is Quality Chemicals Industries Limited. And lastly, Airtel, Uganda. A round of applause. You've been clapping for other countries. So that's MTN. Congratulations. All right. Okay. Stanbic. All right, so we will hand over the remaining certificates for Airtel, QCIL, and Bank of Baroda. Okay, I think my work here is done. I will now invite Paul to give the last 2 phrases as we close this. Thank you.
Ladies and gentlemen, with that, I'd like to close this East African Capital Markets Conference. God bless you, for God and my country.
So my work here is really done. Paul has been kind enough to appreciate the different vendors. Allow me add my voice to Troca. I think they've done a super job. Can we give them a big, big round of applause? Just not only in the venue setup, but also the pre-meetings to make sure that this is well done. And so we want to thank you. Before I move off the microphone, I want to recognize the presence of the president of Uganda Financial Literacy Association, Mr. Daniel. Thank you very much, sir, for joining us for this conference. Troca, you are supposed to share with us a QR code of our photos. Allow me give you just a second to share that QR code, because this may be the final time you're seeing these many faces scanning that QR code. So please share with us the QR code. Please, everyone, get out your phone and do the needful so that we make relevancy over this conference beyond this room by downloading those pictures and making sure that we post them. At this point in time, because Paul has done really the work I'm supposed to do, I want each one of you, after downloading, we do the next assignment. And this is me trying to buy you time to get the QR code. I think what Paul mentioned is very, very important, that now the work is outside this room. So how do we take the conversation beyond this room? How do we take the conversation beyond the borders of East Africa, but focusing on the entire ecosystem of Africa at large? Because once we start to build systems that support the entire ecosystem, then we have done a bigger job and a good job. So I want to encourage each one of you to make sure that this conversation moves outside this room. And please do your best as an institution. Joseph Sachs is in the room and he'll be playing for us. But now that everything has been said, I want to ask, has everyone received the food coupon? Okay, so I have been advised by Jacinta that on our way out, we'll receive the coupon and we'll also receive a gift hamper from the organizers. At this point in time, allow me now request you to rise up. So after rising up, can I request that we clap left and right as we thank each one of us for staying this long. Some of you are not clapping left and right. Can each one of you exchange your right hand of friendship to your neighbor and tell them thank you, and let's continue the conversation. Now that we have done that, I am sure that you have enjoyed your hosts for the conference. Paul, there's something that you talked about in Dubai. Let's talk, really. I think that's very important. Beyond the borders of this conversation, beyond the borders of this room, let's talk. Because we can really talk and see how to make it work. Ladies and gentlemen, I can't go beyond this. I want to thank you very much. I'm going to request for the anthems. Once we are done with the anthems, the networking will begin. But after the anthems, I've been reminded that all of us, I don't know if you can fit, but all of us will make an attempt to come to the front and have one big photo to commemorate these 2 days. I want to thank you very much. The anthems, please. Okay, now, the serious things are done. How many of us are going for the nightlife? We talked about this big thing of tourism, but I'm not seeing you people showing signs of touring. But as you are still contemplating, we've put effort to show you about Uganda, Action Falls, show you River Nile, show you all the cool places. For anyone that needs that information, please, if you can't find me, find Jacinta. Joseph Sachs, are you ready? Please start performing. Can I request everyone to try to come to the front and we see how we fit into this photo? Please come to the front and we see how we fit into this photo. Encourage your neighbor to start moving. Tanzanians, please start moving. My people from Rwanda, please start moving. Kenyans, please start moving. Let's come to the front. To the front. Please stand where you can see the camera. Nesta, we are waiting for you in the front.